Yes, right.
Yeah. So,
you know, Montec has that. Doesn't Montec have that line that there is in India there is a strong desire for weak reforms?
correct. Yeah.
Okay, I think shall we start? 9:02. Is that okay? So we'll start. Okay, I'll introduce you, Mary. Good morning, good afternoon, good evening, depending on where you are. We'll start today's session. Today is our concluding day, the third day, and we'll have 2 sessions today instead of 3. The first one is a fantastic paper by Dr. Rana Hassan, and the second will be a long panel discussion where I would be moderating, and I encourage you all to bring your questions to that panel. I will try to take as many as possible, and if you give me good questions, then I'll drop my own and take up your questions. So bring in good questions. Mary Lovely, Professor Mary Lovely is the chair of this session. Professor Lovely has been our very strong supporter of Raj Center's activities, and particularly at our conferences. She has always been giving her time very, very generously. She is a professor at Syracuse University. She also holds a chair at the Peterson Institute for International Economics. She is a very eminent international trade economist, writes prolifically in both professional journals and policy outlets. So, Mary, over to you.
Great. So happy today to be with the Raj Center Summit on the Indian Economy. This is session number 4. We have about an hour and 5 minutes, so we'll try to run this train on time. Our first paper today is by Rana Hassan. I hope I get this right. Jiang and Milan Thomas, all of the ADB. Is that correct, Rana?
That's right.
Okay, we don't want to forget the co-authors, they're very important. The paper is titled Industrial Parks and Peri-Urban Development, Evidence from India, and our discussant will be Ritam Chowri of Johns Hopkins University. So welcome, gentlemen, and Rana, I'm going to give you the floor.
Mary, thank you very much. And before I start, I just want to thank Dr. Panagaria, not just for inviting us today to present our work on industrial parks, but also just the ongoing discussions with them, the conferences. His papers have been a real driver for us to continue on this line of work that we began originally with Devashish, actually, I hope he's there, on Indian manufacturing related issues. So a big thank you to him. Now, just coming to our paper, this is very much preliminary work that we're presenting. In particular, the data that we have on industrial parks, it's a very rich data set, but it's also data that is work in progress. So a whole bunch of variables have been collected on hundreds of industrial parks, and we are in the process of working with our knowledge partners, PwC, in improving this data set. And I'll talk a little bit about that later on. So, Emily, just in terms of the sharing of the screen, sorry, I should have checked this before, but I guess I'm supposed to be the one sharing this, right?
Try first.
Yes, okay.
Good.
Right. Okay. So I hope everyone can see the screen now. Right.
Yes.
So the outline of the presentation, basically 3 parts. I'll talk a little bit about the motivation. I'll get on to the analysis that we've been doing, and finally the next steps. So coming to the motivation. So I think our audience here, nobody needs to be convinced there's an intimate connection between urbanization and economic growth. cities are where manufacturing and even modern services are produced most efficiently. Now, in this context, the urbanization that we're seeing in the developing world, certainly in India, should be good news. We're getting people and firms getting packed together in larger cities, more densely packed, etc. But the fact of the matter is this link is hardly assured. We know that agglomeration economies can be short-circuited by congestion. And so ultimately, you may have a situation where you see our cities getting larger, denser, but they may not be good locations for firms, at least dynamic firms. So just to make the point, I think it's always useful to consider two extreme examples. So here's an example of Chongqing in China, then a comparably similarly large-sized city in Lagos in Nigeria. And these population, the population of these cities is very similar. So 13 million in Chongqing, about 12 million in Lagos. But when you look at what firms in and around these cities are doing, they're very, very different. So Chongqing, you've got IBM, Foxconn, Cisco, Ford Motor Company. In the case of Lagos, you've got a bunch of natural resource related companies and companies producing daily consumables. So Nestle is there, brewery companies there, etc. The unemployment rate's very, very different. Just 4% in Chongqing, unemployment rate in Lagos much higher, around 28%. Admittedly, older data. The chart in the middle, I won't go over this too much, but essentially what this chart is showing is that Lagos has a lot more informal subdivisions, and its urban planning is much less structured. So essentially what happens is that you have all these arterial roads and they're not so well connected to homes. And that's that's something that's shown in terms of the right side of the chart. So what essentially this sort of comparison leads to is a key question, which is okay, so Chongqing has paid attention to within city transport, good connectivity to other cities, adherence to urban planning, and this is sort of part of the standard livability city agenda that we're also seeing in India. Certainly the issue of within city transport is something that's being paid attention to, but Chongqing has also done something else. It's made an effort to ensure that the firms and industries it has are really attracted to it. And in this context, a lot has been discussed about the structure of urban governance in Chinese cities. So we've got the role of the city mayor, somebody who's very incentivized and empowered to actually provide the public inputs that firms need to thrive. And so we have this recent paper in 2019 by Cheng Shai-Tei and colleagues, which really go into the details on how this system works. Now, if we look at the Indian context, this is a context where city officials have a very limited span of control. In fact, economic development is not even in their purview. But we know that cities are where firms are going to come and locate. So what kinds of systems, what kind of mechanisms can we think of that enable the different public agencies in an Indian city? So whether they're state level agencies or city level agencies, to coordinate on providing public inputs, thinking specifically about what firms need. And it's really this question which led us to this study that we're doing with Niti Aayog, where essentially what we're doing is we're working right now in 7 states. We're looking at 12 cities. And we've got an agenda which is threefold. First of all, sensitizing state officials about the important role that cities can play as engines of growth, then identifying some of the bottlenecks that might be constraining their cities, and finally developing some solutions, and in particular the structure of urban governance that you need. Essentially it's basically all about coordinating. So coordination between industry department officials, urban development departments, municipal commissioners, and town and country planning, and the latter agency is the one that really deals with land management issues in a very big way. Now, I'll start segueing into the discussion on industrial parks. One of the things that we've learned early on in this project is how cities are defined matters a lot. Typically, especially when we started talking to city officials, naturally they are thinking really about their own cities as defined by the administrative or municipal boundaries. But we know that a city is much more than just the administrative boundaries of the city. The city spills over across these boundaries. There's the urban periphery, and a lot of economic activity takes place across these boundaries, and it's intimately connected with cities. And so to illustrate this point, what we did is we looked at a broader concept of cities, and in particular, we used nighttime light satellite imagery to delineate what we call the natural city, so the natural contours of cities. We essentially started with official urban settlements with a population of 100,000 and more. And then we just use nighttime lights to see how the actual city probably is spreading, and with urban activity being proxied by the luminosity. And what we did is we merged all this data with population census 2011 information and economic census 2013, all at the town and village level. So what do we find? When we do this merging, we see that, first of all, no surprise over here, urbanization is a lot more pronounced. And this is a big table here, but you can just focus on the extreme right column. And essentially, we've highlighted two numbers in yellow. If we look at cities with more than a population of 100,000 and more, this is accounting for about 19% of India's population. However, when you define cities our way, we're talking about a much larger fraction of the population, about 31.1%. So basically, a lot more urbanization when you use this broader concept. Now, how does this relate to manufacturing? So what we find is that manufacturing increases considerably as you think of natural cities. And over here, what we have is some pictures of Indore. And on the right-hand side, this is a satellite image of the Indore area. On the left-hand side, you can actually see that it's only a fraction of this lighted area, which is really the administrative boundaries of Indore. So you can see this black line on the left-hand side panel delineating Indore. Now, I'd like to draw your attention to the southwest of Indore is a place called Pithampur. So very well lit up. And why this matters now, why I've shown you this, is because when you think about the economic structure of Indore, if you compare the administrative city with the natural city, you find manufacturing far more important. So essentially, if you look at the natural city of Indore, and in this table, it's this second and last row, not surprisingly, employment is a lot more because we're talking about a larger area. But what's interesting is that the share of employment that's made up of manufacturing is higher. So it goes up from 23% of the city to 30%. And the share of formal employment, which we basically proxy from looking at employment in firms with 10 or more workers, shoots up also from about 17% to 29%. The last two columns basically look at the number of large enterprises defined here as firms with 100 or more workers. You see that if you think of the Indore administrative city, you're just talking about 14 enterprises reported in the economic census data. It shoots up to 92 when you start including the whole natural city. Modern service related firms, large firms, the number also goes up, but it's nothing like what we see in manufacturing. What's also very interesting is that if you look at some indicators of specialization, so if you look at what's special about Indore in terms of having employment in an industry which is far higher than the average for India, you find that Indore, what's special about Indore is actually employment in sewage and sanitation services. So you have a lot more employment in this sector relative to what you see in this sector nationally. But when you look at Indore Natural City, its highest employment specialization sector is actually the manufacture of motor vehicles. And so, when you dig a bit deeper into what's going on, this is really being driven by Pithampur, which is that place I showed you southwest of Indore. And you have a lot of different types of firms. You've got pharmaceutical supplies over there, but a whole area of manufacturers. And in automotives, you've got Volvo Eicher is located there. You've also got Mahindra's with a big plant over there, manufacturing scooters and other two-wheelers. So this is where it becomes important to look at cities well beyond their beyond their administrative boundaries. Just very quickly, the same pattern is there at an all India level. We have highlighted two numbers. So when you look at these administrative definitions, manufacturing is accounting for 34% of employment. When you go to the natural city, much, much more, 20 percentage points. And what's driving this? It's really the larger firms. So if you look at the set of firms which have 50 or more workers, we see their share in administrative cities going up from 36 to it's shooting up to about 72% in the natural city. So this phenomena is being driven by larger firms, and it's all very reasonable. It's large firms need more land. They do want to be closely located, co-located with a large urban agglomeration. And so where they're going to do it, they're going to do it on the urban periphery. So fundamentally, quite important to think in terms of natural cities. Now, to segue into the next part of this talk, which is on industrial parks, there's this question we've had in mind: what happens to the neighborhood? And on the left-hand side, what we've got is some pictures of Sri City. So one is simply from the sky, and you see Sri City. This is a small township. It's a private sector, privately developed industrial township. It's got a SEZ area as well as a domestic tariff area. And you see it's about 40 kilometers from Chennai. It is in Andhra Pradesh, though, in Chittoor district. And you can see by just comparing these 2013 and 2019 images that a lot of action has been taking place around Sri City. So the luminosity is just really spreading. Now, the picture below is something just from a quick Google search. This is actually a place I got a chance to visit in 2017. It's really very well planned. Now, what you see from the sky are just these big factories, but when you actually go there, you see a lot of things coming up. Dormitories are coming up, and a lot of amenities coming up. It's beginning to look like a modern town. Now, the interesting thing is what happens outside Sri City. And I don't have a picture of Sri City. I regret actually not taking a picture. But the big question is, what's it going to look like? So on the right-hand side now, I have these two panels. The one on the left, it's a very messy sort of urbanization. And by the way, these pictures are just this one is not even from India. This is just a picture of an informal subdivision outside a major city in Asia. And basically, you see that houses have just come up wherever possible. And the bottom line is it's difficult for actually residents to get to any major arterial road. The time it takes them to get to work just skyrockets. So this is what Anthony Venables, for example, calls messy urbanization. On the other hand, you've got this other very nicely planned residential location that's coming outside, again, a major urban agglomeration. So the big question is, what's the development around Sri City going to look like? And we believe that it actually matters whether you just let urban sprawl and messy urbanization come in and take place, or whether you try to master plan this whole area well, actually matters. And that's part of the large project. I'm going to now switch gears a little bit and then just dive into this issue of the industrial park and economic activity around it. So that's the next part of this talk. So this is the industrial parks and peri-urban development part. This research is basically, it's part of this whole literature on place-based economic development. So countries have tried this. It's not just developing economies. We see this being tried everywhere, developed and developing economies. So essentially, governments try to encourage employment or the entry of firms, or they try to deepen the manufacturing base or introduce selected industries in particular locations. And some of the common tools that are used are tax incentives, grants, infrastructure support, but a common tool also is industrial parks. So basically, the government provides an industrial park, and I'll get back to what that means, as a way of actually promoting local development. And of course, when you have an industrial park, there are really two things that are going on. One is the attempt is to improve outcomes of the tenants inside the park. So if, for example, if you want to boost exports, you want to get tenants inside this industrial park and make sure that they have an environment where they're really able to focus on producing for exports efficiently. So that's an issue of whether a industrial park actually improves the outcomes of its tenants. But the second part, and that's what today's talk is based on more, it's this question of, do parks benefit the local economy? Now, there is some evidence on this. It's a growing area of research. You see a list of papers over here. I'll just focus very quickly on two of them. Hyun and Ravi is a relatively recent paper where the authors basically look at the effects of about 150, 200 special economic zones in India using both nighttime lights information as well as worker and firm outcomes using the annual survey of industry, the economic census, and unemployment survey data from the NSS. There's also a much more recent paper by Ritam, our discussant, and his co-authors. And specifically, what they do is they look at the effects of Karnataka's industrial areas program, again, on economic activity neighboring these industrial areas. And what's very interesting about this study is that the industrial area program, unlike SEZs, where basically the government is providing a whole bunch of fiscal incentives, the government is also providing business services like a single window, one-stop shop kind of administrative setup. The industrial area program is just something providing land. It's just basically taking agricultural land, rezoning it to industrial development, and saying, okay, firms can come in. And I'm oversimplifying, of course, but both of these papers actually do find that these parks, these zones, do have a positive effect on their neighborhoods. So in terms of our study, we use, so we're trying to answer a very similar question. In particular, we are looking at an area of industrial parks all over the country, and we ask whether these parks are encouraging structural transformation in the sub-districts they are located in. What I think is a little unique in terms of what we're trying to do is that our data set actually allows us to look at various characteristics of industrial parks. So in addition to having information on whether these industrial parks are SEZs or not, we also know about the size of the industrial park, and we have information on various amenities provided by the industrial park. We also get to this question of whether industrial parks location matters. Now, this is important because more or less governed as a municipality, as a census town, or a village. Now, this is actually a very important question, and I have to admit, I mean, we're just scratching the surface. And the reason this is very interesting is I'll go back to this example of Sri City. So one of the interesting things about Sri City is that, you know, if you look at what the governance structure is, it's still rural. It's not urban. And, you know, when we spoke to people about, okay, don't you want to make this area urban? And the answer that we sort of got was no. And one of the things people fear is that the moment you make this a municipality, a whole bunch of rules and regulations start kicking in. So on the one hand, whereas you know, better planning norms might come in, firms might actually start getting more constrained in operating. So this is one of those tensions that's out there. And I think fundamentally it just goes into this whole issue of that, you know, should we be thinking about urban governance systems which bring in the good stuff, the better master planning, flexible land use planning, but they don't really create bottlenecks for firms. And I think that's really where a lot of the thinking has to be. We're not getting into that in this talk, but it's definitely one of the big features of the study that we're doing with Niti Aayog. So now coming to the data, our data on industrial parks, it actually comes from the Department for Promotion of Industries and Internal Trade at the Ministry of Commerce and Industry. And I'd like to just make, you know, one point about this this whole endeavor. It's actually a very interesting initiative in that if you think about a firm thinking of choosing where to locate, you know, you can think of these national indices on ease of doing business, and frankly, it's not very helpful to a firm. The doing business indicator of the World Bank might say whatever about a country, but what happens on the ground might be very different. And of course, going to the state level also may not matter that much. What really matters to firms is that very specific location they are, and it's that recognition that led the department of DPIIT to basically say, look, you know, we want to develop this industrial information system that tells entrepreneurs about the parks that are out there. And so what DPIIT did was basically it contacted all these state industrial development corporations, and it said, okay, look, you send us information on your industrial parks. So basically that was the industrial information system that got developed. So information about 3,500 parks came in, and some basic information on the parks was there, like size was there, and of course the address of these parks, etc. The ownership structure of the park. Was it a SEZ? Was it a non-SEZ? Was it a private park, or was it a PPP type of park? Was it a state park? Things like that. That type of information was there. Subsequently, in 2019, there was what's called the Industrial Park Rating System 2. And this was a collaboration. So this is, once again, something that the DPIIT initiated, and ADB and PwC came together to put together this part of the project. And essentially what's involved in the Industrial Park Rating System 2, it's called IPRS 2, is that an attempt was made to actually go out to a subset of the parks and ask both developers and tenants questions about the nature of their parks. And now you might be wondering, okay, how did they select which parks to go to? And essentially what was done is each of these state industrial development corporations was told to nominate parks, The only conditions were that a park should have at least 25% tenancy. So a brand new park doesn't qualify. And the other feature was just simply it was left to them. It was left to parks to say, look, tell us about your best parks. So with that kind of structure, information was collected on these 300-400 parks. Now, in terms of where these parks are located, a subset of the parks have geocodes, but for the rest of them, it's basically information on the district and addresses. And by looking at these addresses, we've been able to figure out which sub-districts these parks belong to. And to look at the characteristics of these sub-districts, we use economic census data. We use luminosity information, we use information for the population census, and we've tried playing around with the ASI frame for 2013 and 2018. So this is not an often used data set, the ASI frame, but we're just giving it a shot because we do want information on just enterprises from whatever source we can get. And the ASI frame is an interesting source out there. It basically provides two pieces of information. It provides the address of firms that are in the ASI register, and it provides some information on the employment of these establishments. Now, the data is a bit messy, etc., and we're still in the process of cleaning it, but it seems to be to us something promising to look at. So just again, coming back to a few more details on the industrial parks information. So the original IIS data, the original set of parks that the DPIIT got information from states on was about 3,373 parks, of which then 478 industrial parks were nominated by the state. So these are the ones which I mentioned have 25% occupancy, and these were the ones where the team basically developed a questionnaire which was given to developers and to tenants. A whole bunch of questions were asked. 45 in all for industrial parks in general, 40 of them specifically for SEZs. And essentially these questions pertain to the external infrastructure, the internal infrastructure, the business support services that might be there, and features of environment and safety. So examples of external infrastructure, this one is a little bit thin. It basically just focuses on connectivity. How is industrial park connected to the outside world, and in particular, how is it connected to the nearest highway? So is it like a 4-lane road that's connecting to the highway or not? Internal infrastructure, it's as you can imagine, it covers this issue of uninterrupted power supply. It covers issues of water supply, sewerage systems, and even effluent discharge. That's all part of the internal infrastructure. There's also some questions on dormitories, whether these parks have dormitories or not. And then business support services include a whole bunch of things, including whether there's a skills development center over there or not. So let me just continue. Mary, how am I doing on time?
You have until about 9:40.
Okay. So great.
So yeah,
Donna, you can take more time from me. I mean, you can go until 9:45. I don't. Yeah.
Okay.
It's okay. We are relaxed on time also today. If you take out of our panel, that's fine too.
Right. Okay.
It's going well, so keep going.
Great.
Yeah, Ron. It seems like you still have a lot to tell us.
Yes. The econometricians in the crowd may get disappointed, Mary. But anyway, let me continue. Okay. So yes. Now, I've already spoken about a little bit about the data. So these first couple of bullets, basically, again, just talk about. I've already spoken about these things. Let me get to the bottom two bullets, and this is where now the data caveats come in, and my point early on that this is really work in progress. So one of the variables that we've had a tough time with actually is age, first of all, about a good 45% or so of the industrial parks do not provide information on the project date, the date of the project. As you can imagine, if you're doing any kind of causal analysis, this is going to be a problem because you do need to have information on age, and in particular, there's also the issue of what does the person who's filling out this information on the age of a park consider? Are they going to take age, the starting point as the year that the industrial park started operations, in the sense that a tenant was ready to move in, or are they going to take it as the date that an industrial park was notified? And these things can be fairly different, and specifically on average, this can be about, we're talking about 2 years, two and a half years. From the date a park gets notified to the date that the park's boundaries have come up and some basic infrastructure is there, allowing at least one tenant to come in. So this is a variable that we do want to focus on. I'll talk a little bit about this at the end. And specifically, we do have the option, of course, of now spending some resources on improving the variable age. But as you can imagine, data collection is costly, and so we have to think in terms of, okay, what types of parks should we focus on? Do we focus on particular states, etc.? Do we focus on, are there certain natural experiments that we could exploit depending on policies that different states have used? So this is all stuff that we are beginning to grapple with, and we've got to come up with something in determining our strategy for the next round of data collection. So anyways, let me now continue with that. Some summary statistics on these parks. So our full sample is this 3,000 odd set of parks. So if you just look at the first row, the land area of parks, fortunately, is a variable that's it's been collected. It's available for many of these parks. So almost the whole set of 3,200 parks or so have information on the land area. And the average park is about 156 hectares. But as you can see from the next 3 or 4 columns, there's a wide spread. So the median park is much smaller. It's 22 hectares, and the reason you're seeing that huge mean is that there's some massive parks. So the Mundra SEZ in Gujarat, for example, is in this data set, and that is just a massive park. It's like what you see in China, municipal level type, almost like a city-sized industrial park. So that's really what's driving that number. Many parks are fairly small. 7% observations missing. Age, that's really the Achilles heel if you're trying to get into causality. So here we've got 60% missing, but in any case, the average or years that a park has been in operation is 21 years. When you look at the median, it falls to 15. So basically, you've got some fairly old parks. SEZ status. About 5% of the sample are SEZs. Now, coming to the issue of location, how many are located inside a natural city? And so about 61% of these parks are inside a natural city. The rest are falling outside a natural city. And then finally, 12%, that last row is simply basically about how many of these industrial parks out of this 3,254 were nominated by the various state agencies. So 12% were. So in other words, when the states were told that, look, we have all this information on industrial parks in your state, you tell us which are the good ones you want to highlight. What they basically got was a much smaller percentage of parks. It's about 12%. And there were certain rules that were used. I mean, you didn't want Gujarat just flooding the whole list. So there were some caps that have been used in this process of deciding which set of parks are going to be part of this IPRS2 exercise, which is the exercise where surveys were conducted of the tenants and some tenants and the park developers. Now, going to that sample, so it's about 426 odd industrial parks that we're dealing with now. And one of the things you can see is immediately these parks are larger. So if you look at that first row on total land area, you're seeing that the median industrial park is now suddenly it's shot up from a value of 22 hectares for the first the full sample. We're at 125. So not surprising. The better functioning parks from the state's perspective are the larger parks. Interestingly, they're slightly younger, but just slightly so. But again, we have this problem of the missing variables. So you can see that even in this restricted sample, we've got a very large number of parks which are missing that very crucial information on the age of the park. Finally, 12% of these are SEZs. And a lot more of these are inside natural cities. So you can already see this pattern where the better performing parks are the ones which are going to be close to these vibrant urban agglomerations, not the ones which are far away. About 28% of these parks have they're specialized. So, for example, there's a park which just deals in the electronics. You basically have to be an electronics firm to be in this park. But the vast majority of parks are mixed. You can manufacture hydraulic excavators. You can manufacture some automotive components. And about 12% of these parks are privately owned. Okay, so just some pictures. Here are just 4 states, Madhya Pradesh, Karnataka, 2 others. And what we've done is we've shown you, we've broken these states down into their sub-districts. And basically we've colored in red any sub-district which has at least one park. So you can see that it's interesting. They're sort of spread out. It's not like they're all just concentrated all together. And you see this pattern, especially, for example, in Madhya Pradesh, that they're spread out quite a bit. Now, coming to the sub-districts. So essentially, for the states that we're working with, we've got a little bit more than 5,000 sub-districts we have. And basically, the numbers here are essentially telling us about the structure of employment in these sub-districts. So, what's the share of employment in enterprises at 10 plus workers? So that's our proxy for employment in the formal sector. And you can see from the economic census 2013, that's the top panel. So about 17% of employment is in these enterprises with 10 plus workers. Number of firms with 100 workers or more. You see that on average there are about 6.3 such large firms in a given sub-district. The median value is just 1 though, and the 75th percentile value is just 3. So essentially what that's telling us is that large plants tend to be more concentrated. They're in particular sub-districts rather than just spread out evenly and as we would expect. Coming to the bottom 2 rows of that first panel, this is where we're just talking, describing the number of industrial parks per sub-district. So basically what we see is that we have a lot of sub-districts which have no parks. So even at the 50th percentile, the median sub-district doesn't have a park. The 75th percentile has 1 park. And now conditional on your having a park, on your subdistrict having a park, there is some clustering. We see that even we see that on average, these subdistricts which have these 1,800 subdistricts which have at least one park tend to have almost 2 parks on average. But still, one thing I want to point out, it's not like, it's 10, 15 parks per subject district. And this always becomes, I'll explain why this is important a bit later. A bit down the road. I'm not going to go over the second panel. This is just the same information from the economic census of 2005. In some of the work we've done, we've also looked at subdistrict luminosity. So this is for 2013 and 2019. These are just the different values from the nighttime lights data. The larger the number, the more luminous a subdistrict is, and that's a proxy for economic activity, modern economic activity. Now, a point that I'd made before earlier from those summary statistic tables, majority of the parks are small in size, and here we've given the distributions. So on the left-hand side, you can see the distribution of land area for the full sample. On the right-hand side is the land area for this smaller sample of about 400 parks that were nominated by state. So this is what the distribution looks like. So there's quite a bit of spread, as we could also tell from looking at the 25th percentile, 75th percentile values from that table. Now, how about industrial parks over time? So the caveat, of course, is that age is missing for a lot of the parks, right? It's about 45 to 50% of the parks are not reporting the age, but of the parks that are reporting the age, both for the full sample and for this the smaller IPRS2 sample of nominated parks, we see that essentially parks have been around for a long time. They're climbing from between 1980 and 2000, and around 2005 there's an acceleration in these parks. And 2005 is also the year the SEZ Act came into being. Now, of course, that's not all that's driving things here, because as you may recall, even from the full sample, only from this right-hand sample, the IPRS2 sample, only about 12% of parks actually are SEZs. Now, in terms of are the IPs located in close proximity to these the natural cities, which we take as a proxy for a vibrant urban agglomeration? The majority are, but you have a lot of parks outside. Now, coming to the analysis. So essentially what we've done is two things. First is just to look at the cross-sectional patterns. So basically what we've done is run a bunch of regressions where we look at where we examine whether the presence of an industrial park and certain characteristics of industrial parks, how are they related to the structure of employment at the sub-district level. And so essentially the regression equation, very, very simple. The Y denotes various types of outcomes at the sub-district level. So for example, the share of employment in 10 plus firms, or the number of 100 plus worker firms, etc. And the IP characteristics are all these different things that I've spoken about. Now, of course, the preferred dependent variable would be a change in the outcomes. So that's something that's still in progress right now. What essentially we'll show you is just some of the simple correlations between the 2013 outcomes of the sub-districts and the industrial park characteristics. The second thing that we want to do is, of course, get to a more causal story. So we'll show you one table, but essentially the big issue in this literature is the concern about how parks are located. If your parks are being located in the most vibrant places, and certainly that's where the private sector would want to locate a park. then you can't just take these simple correlations between a sub-district's characteristics, or rather outcomes at the sub-district level, and the fact that the park is located there is really telling you a causal story. So this is where we've been putting in some effort, but the absence of age data, as I've mentioned before, really creates an issue. So anyways, with that, let me just get to the numbers. I've already spoken about the different variables, so let me just get to the results. And what we find is, so having industrial parks, you have a more luminous sub-district. Luminosity levels are about 10% higher. If the sub-district actually has an SEZ as one of the parks, you find employment share in 10+ workers is 23% higher. So these parks are located in places with more formal employment. If the industrial park is located in a natural city, the employment share in 10+ workers is about 15% higher. And if you have an industrial park which is large, and by large what we mean is it's in the top quartile of the size distribution, you're basically looking at your sub-district having 20% more 100+ worker firms. Finally, if you're in a sub-district which has a park which has been nominated by the state as one of these good parks, one of the parks that they think is good, you see the employment share of manufacturing firms to be 16% higher. So this gives us considerable amount of comfort that all these different data sets that we're bringing together are telling a pretty reasonable story. Now, coming to the nominated parks. So once again, the luminosity levels are higher. Interestingly, SEZ status doesn't really matter, and in a sense, it's kind of, it makes sense. These are the parks that the state thinks are doing well, and so whether you have this SEZ status or not, it probably doesn't really affect things. Again, being located in the natural city, you see much higher employment shares. And again, having a large industrial park, you see much more luminosity. So luminosity levels are about 33% higher in the sub-district. Now, what's interesting are these last two bullets. So basically, what we find is we find some evidence. It's not that strong, but we do find in some of the regressions that of the things that these parks have been evaluated on, the one thing that comes up as significant is basically these employment shares. Is the internal infrastructure. So an industrial park which has better internal infrastructure is going to basically, it's going to be associated with a sub-district with a lot more formal employment in the way we define it. And then finally, if this nominated park is private sector owned, you find the sub-district having twice as many 100+ worker firms. So that's the set of results we get from these simple correlations. Now, just moving on to this issue of causality, what we've tried to do is we've tried to basically use a difference in difference framework, recognizing that parks are not placed randomly. They're especially a private sector park is very likely to be located in a sub-district which is already fairly dynamic. And as I've said before, this is highlighted in blue. What's really constraining us here is this age variable. We're hoping to do something about it. But essentially, what we've done for now is we've done some interim analysis, just as a proof of concept, and it's basically to just look at the set of sub-districts that had a park that was built between 2005 and between 2006 and 2020. So we threw out all the other sub-districts. We're just looking at sub-districts with a park built somewhere between 2006 and 2020. And basically we say, okay, let the treated parks be the ones that were developed between 2006 and 2012. So the first half of our this period that we're looking at. So these are the treatment sub-districts, and the rest are the control sub-districts.
Rana, please speed up a little bit.
Yes, actually, this is the last slide, Dr. Panagarya. So results are fairly mixed, but one of the things we find here is if your park is an SEZ, then you're basically seeing better outcomes for all these different these different variables. So this is the one piece of causal kind of evidence that we have that the nature of the park matters. So I will stop there. I'm not going to try to summarize. I just want to focus again on the last bullet. One of the challenges we're faced now is this getting age information, and the more we can think in terms of a strategy of what types of states to focus on, that will limit our costs, of course. So let me stop there. Thank you very much.
Great. Thank you very much, Rana. Ritam, time for you to offer some comments on the paper.
Okay, I'm going to share my screen.
Rana, you have to stop sharing. Okay.
Right. Okay.
Can you see my screen?
Yes, very good.
Okay, great. I first wanted to thank Professor Panagarya for inviting me, and more so for letting me comment on Rana's paper. Actually, I want to thank Rana, with whom I've had multiple conversations on Indian manufacturing since I was a grad student. And it's funny, I actually worked with Rana when I was in my third year at Columbia. So Rana and I go back a long way. Okay, so I'm going to comment mostly on the second part of the presentation, which is on the effects of industrial parks and how to sort of try and look at it in a causal way. So just as a brief introduction, Rana has already spoken a lot about it. Place-based policies are, you incentivize firms, giving them tax incentives or wage subsidies or some sort of grants, or you build industrial parks for them, and you essentially try to incentivize them to locate to a particular area. Now, these can be of both kinds. You can have a place-based policies, a policy where you're trying to incentivize firms to go to a backward location where there are no firms, or you try to incentivize firms to locate to urban areas because that's where the growth is happening. And the core idea is that, for policymakers, it's probably easier to move jobs to people than to move people to jobs. So that's basically the core idea behind all of these place-based policies. And I wanted to mention that in developing countries, I mean, this is popular both in developed and developing countries, but most of the evidence is that these have been effective. Place-based policies of different kinds have been effective, whether we speak about tax exemptions, whether we speak about SEZs, whether we speak about industrial parks. Most of them have been effective in generating employment and firm growth. Now, despite this, and the reason why this slide looks a little bit like self-promotion, Rana, is because the comments are going to be a collection of referee reports over many years that I've got because I've worked on this topic. So let me start a little bit with that. So generally, as you pointed out, despite the fact that industrial parks and place-based policies are such popular policy tools, it's very challenging to look at their effectiveness. And as you correctly pointed out, the first problem is that industrial parks are not placed in a random manner. So they are placed either in places that are very vibrant and growing, or they are placed in places that are so backward that there was no industrial activity in those places. So just a simple comparison is very, very hard. So as you pointed out, that you're right now. So a lot of the comments here are also because it's still work in progress for you and your co-authors. So I wanted to say that if you want to make a compelling case with your difference in differences, you would still need a lot of pre-industrial park setup data. So you would need to use a lot of other economic censuses, a lot of the other previous nightlights data that you have to convincingly make, to convincingly show that that places that eventually get an industrial park and places that did not have an industrial park looked similar in trends before the industrial park happened. I was going to say that some of the other problems in this literature, especially when you're trying to look at the effectiveness, is this concept of spillovers between industrial parks and nearby areas, and which one can convert that into a strength by saying that that's exactly what we want to study. We want to study what happens to the nearby areas if you set up an industrial plant. But that's something to keep in mind. The third thing I wanted to raise was this concern about general equilibrium effects. When you set up an industrial park, people start moving in, firms move in, there are workers moving in from other parts of the country or other parts of the city. This can lead to effects on housing prices or sort of other local prices. So that's something to keep in mind as you go ahead in the project. Maybe you will have to get a lot of other data sets to sort of comment or at least rule out some of these issues. Then I think the big picture question that people always have regarding place-based policies and industrial parks is basically whether they lead to growth in overall economic activity or whether they just lead to a relocation of economic activity. Is it that firms close down outside of industrial parks and then just set up within industrial parks? So that, I think it's that will also be crucial, and I'm sure there'll be some ways that you will address this issue to comment on whether industrial parks have led to overall growth or not. So despite these challenges, I just because you are in this right now, your team is the project is still work in progress. I wanted to say some different avenues that you could look at, to probably take the paper in a slightly different direction. So I wanted to, and some of these comments, as I was, when you were talking, I saw that some of these comments were also raised on the chat. So, that's, I just want to reiterate that some people, some of the attendees have already raised some of these issues. So the first thing I wanted to ask, I think you have data on this, is, what sorts of industrial parks work? Is it that specialized parks for certain industries, such as apparel parks or food processing parks? I mean, if you have a specialized park, do they bring in more benefit than a general industrial park where, any sort of firm can enter? The second question that I wanted to ask you or urge you to look at is, there are these different incentives that are provided by industrial parks, which you mentioned. Sort of there's internal infrastructure, there is good electricity, there's good, there's availability of land, and then you said there's also some sort of business support, right? So if there is any way to, sort of disentangle these two channels, how much of the effects are coming from just the infrastructure component of the parks as opposed to the business support component? And the reason why I say that is because there's also a lot of interest in, business incubators, accelerators by the government of India. And, there's this push towards promoting startups. So is it possible that industrial parks can play a role there, in terms of generating startups? And we can talk more about what data sets you can look at if you wanted to just focus on startups and startup activity. But I think the main concern is that you will still need the age of the industrial park before you can go towards any direction. So the other things you have already spoken about, the role of industrial parks in structural transformation. The other thing I wanted to, sort of urge you to look at is, in the surrounding areas, what sorts of firms come up? Is it, are these small firms? Are these, are they in the services sector? Are there more hotels? Sort of what sort of activity comes up in the surrounding areas once you build an industrial park. Moving on, the other channel that you could also focus on or look at is just looking at the distributional effects, which you have already started looking at by looking at the firm size distribution. But you can also look at, the effects on informality outside the park. What is the effect on, workers, whether more educated workers or less educated workers benefit? Then there's also all this literature saying that, when new jobs become available, the returns to education change. So people want to remain in school and get more educated and so on and so forth. So that's one other direction you can look at. There are papers on this by Emily Oster where she shows that when the IT, when these call center jobs increased, the returns to English education increased and people wanted to remain in school, so on and so forth. Then one thing that you briefly mentioned, which was relating to the environmental and health standards, which may also be interesting if you can get data on air and water pollution, is what is the contribution of industrial parks to local air and water pollution? That's a totally unexplored area, and it may not right now fit into your agenda, but that's something that would be a very interesting paper and definitely publishable. And the final thing is, again, you briefly raised this point, which will be a completely separate paper, is to talk about the political economy of industrial parks. I think some people mentioned it on the chat as well, that how are these decisions regarding land rezoning and where is it that you want to place these industrial parks? How are these decisions made? If one could get more information on that, I think there was some information on the minutes of the meetings on the decisions of these SEZs, if I'm not mistaken, on the website, or the SEZ India website has some of these minutes. So that you could probably explore that a little bit more. I think I'm just going to add a couple of more slides just to ask you or your co-authors. I think I was slightly confused by this, so let me just put it out there and then I'll stop. Why do you use sub-districts and not villages when you have village level data and you have a lot more observations in that dimension? The second thing, I'm not sure if this was a typo or is this a worrying thing about this. On your slides, it seems like 2019, the luminosity seems to be going down. I wasn't sure if it was a typo or if that's a problem with the data, because it seems like India should have been growing between 2013 and 19. So maybe you can have I'm not sure if this was a typo or.
It's a typo.
Okay.
Yeah, it's not. Thanks, Ritam, for catching this. This is definitely a typo.
I had a quick question regarding this table, which was the only which was a table that you showed. How do I, we can talk about it later, but it seems like there is a negative effect of having a park in the sub-district. So I put that in the red. And that was slightly surprising to me. That if you have an industrial park in a sub-district, the difference in results say that there are fewer firms with 10 plus, 20 plus, and 100 plus workers. And only when it's an SEZ does it seem to work. So I wanted to, we can talk about it later. So I'll just stop it. But this was a surprising result to me. So I'm just going to end here. Thank you.
Thank you, Ritam. So let's take a few more questions and then give Rana a bit of a chance to respond. Rana, just looking at our chat, I've grouped together some questions, and I have a brief one of my own, which just segues on with Tom's last question about your results. So you raise all these interesting issues in the beginning about the role of administrative structure, and presumably, and apparently that's another part of your larger study. You raise these interesting issues about natural city versus the administrative city. I'll call it the administrative city, or the official boundaries of a city. Yet you don't seem to do much except include it as a control variable. So I'm wondering how you might leverage that, and whether there's any parks that span the official boundaries versus the natural city boundaries. So if there's any leverage there, or distance from the administrative boundaries. I'm wondering, what is it that you're trying to get at here? Is it better management, worse management, more political manipulation, less political manipulation? But that seems to be a very interesting way to kind of think about how public administration interacts with economic development. Okay, just from the chat now, there was a lot of talk about PCRIR. I think you might want to define that for our audience, since a lot of people seem to know what it is and maybe some don't, like me. Should PIR have been promoted more aggressively? That's a question. There are a lot of comments, including about Eastern India and prospects for coastal zones, which I'll just leave later for our coffee break. Are SEZ's laws too rigid? You find SEZ seems to have a positive impact, but don't they come with, more restrictions? That's one question. Gender export success passed already. Is India kind of too late to the party? Is there any coherent pattern to the park's success? And this is something clear that Ritam brought up in his remarks, and provided lots of ideas for how to expand upon that. Particularly, one of the questions was whether coordination of activities within the park, as opposed to just sort of allowing anybody to come in, does that matter? So those were some of the things I think that may be challenging given your data set, but perhaps we can take 5 minutes to let you respond, Rana.
Mary, thanks very much. Okay. Yes, I am unmuted. So first of all, a big thank you to Ritam. Ritam, you've laid it out very, very nicely, the issues. You're focused on the part of the story that we really now have to grapple with, and it's that whole issue of causality. You've also given a number of interesting things to look at. For example, this returns to education, in how that is evolving in these areas. Great questions. I'm gonna, of course, be asking you to share your slides, but I quickly took screenshots and copied them in case you lose your file or something happens. Now, very quickly, that last slide, the reason we put it was, just to be completely transparent, that this is something we're still trying, and I think it's that age variable. So first of all, remember what's happening is, for half the sample, we don't have information on age. So you're sort of picking up parts which have age, and that starting point itself is problematic. Nevertheless, running regressions is relatively simple, right? Once you've got the data, so we just said, okay, let's just have a look. You're absolutely right. That interaction term, one would expect it to be positive. We highlighted the SEZ one because that was at least going in the same direction that the paper by Hyun and Ravi goes, and that gets to a point that Mary, one of the questions in the chat box was about that. Well, did the SEZ policy fail or succeed? And if I can just go back to this paper by Hyun and Ravi, which examines SEZs that were started sometime between 2006 and 2016, and it has a very nice strategy to get at the causality issue. In particular, they're only looking at locations where either a SEZ was operating or it had gotten notified. So notification is when the park, it's basically clear that a park is going to be coming up. It hasn't started, but just the fact that it's been notified means people can start reacting to it. And what they do find is that notwithstanding all the limitations of the SEZ policy in India, so remember that, I'm sure there are many people here in the audience which will recall that there were many criticisms made of this policy. So, for example, one had to do with land size. The Chinese parks, for example, are very big. Many of the successful parks globally are quite big, but some of the parks in India were quite small, even accounting for the fact that some of the SEZs were like IT parks. So people expected, okay, this is not going to work. These sizes are too small. And firms are just going to come in to basically get these tax incentives, etc. But if you look at least their results, you do see greater formalization taking place in the neighborhood of these parks. You see wages going up of better workers. So there is evidence on that one. The point on these petrochemical parks, I don't have any real insights on this one. I would just say it's a discussion that I was having with Dr. Panagar just before this session started, that I think the way the government is going at this is really spot on. And let me put it in the following way. So, we've had all this controversy, right, about the doing business indicators and China's numbers. You also have this paper, again, by Cheng Shai-Te, where he starts off by looking at the doing business indicators for China back in the mid-2000s and finding that, boy, these indicators are pretty rotten, and yet this is the period which so much investment is taking place in China. And then, he starts digging deeper and he says, okay, his quick 1 week exercise shows that the World Bank pretty much gets it right. The regulations are pretty rotten, and yet firms continue to come in. And the reason he starts uncovering is because the business environment at that particular location, in those particular cities, is actually really good. The city officials are making sure that all these different public inputs firms need are there for these firms to come in. And so this whole endeavor by the government is exactly along those lines. So this industrial parks rating database, it's all coming because what the government is saying is that, look, investors, they can compare. They can say, oh, India's ranking is this or that, or this state's ranking is this or that. But really what matters for them is the specific area where they're going to locate. Here's this park with land available. What kind of amenities does it have? What kind of connectivity does it have to ports or airports or big urban centers? And that's what this whole effort is. And so if I think about this whole effort that's being made, then I would be really an optimist on how these parks are actually going to evolve in terms of who's what types of tenants are getting located and what they're trying to do. So, Mary, sorry, I'm not sure if I'm answering some of the other questions you raised. Okay, you talked about this the natural city and this administrative city thing, and partly again,
let's conclude, Rana, quickly in 1 minute.
Yes. Okay. So the reason we wanted to do this was, again, this tendency of some people calling for these parks to get located far away, and as when we talk to our colleagues at PwC, for example, they're the ones who've been talking to these firms a lot. And the rule of thumb that I've come to, the conclusion I've come to, this rule of thumb is there. If you're 50 kilometers away from a vibrant urban center, nobody dynamic wants to locate there. unless it's something very special about some natural resources that you're close to, because you forget about getting a good CEO or a good supervisor. Even rank and file workers don't want to be too far away from the amenities that a city provides. So that's what was motivating us. So let me stop there.
Okay, well, I think we're going to have to leave it there. Thank you, Rana, so much for the presentation.
Mary, can I just make a quick observation? Just a quick.
If Professor Panagria allows.
No, Rana, no. Subbu, you are coming in the next next session.
Just a suggestion.
So
I just wanted to make a suggestion.
yeah, but pass it on to him separately. Pass it on to him separately.
Sounds good.
There you
because
go.
we are really running out of time for the panel. So.
Okay, Ritam, thank you. Great discussing. Thanks to everybody, and stay tuned for the next panel. Thank you.
Thank you, Mary. Thank you, Rana. Thank you, Rhythm. Fantastic session. Great paper. Lots to think about. So we will now move on to the concluding panel of the conference, end of the day, obviously, as well. And we are going to now take a rather wide approach to this panel, bringing in a number of different sets of issues. We do have a terrific set of speakers, 4 panelists, all very well known, very well informed. So let me begin with you, Subbu. You have been the CEA until very recently, and according to the grapevine, I understand that you have been the Prime Minister's most cherished Chief Economic Advisor. You're now back to the Indian School of Business, back to being a Professor of Finance. I'll begin with you. A question that we have already discussed. In fact, this is where the conference had started. But for our panel, I think this is a good starting point, and we'll take it from there. So in 2019-20, even before COVID-19 hit us all, growth rate had fallen to 4%. And that was the subject of Poonam's paper, where we began. Then during the first COVID year, growth rate really plummeted, minus 6.6%, largely driven, of course, by the quarter, April to June quarter during which the lockdown was extremely severe. But nevertheless, it was a very big slide down, unprecedented, never actually in our history since independence. So it was truly an exceptional shock. Yet by the year 2021-22, which is the year after the 6.6% decline in GDP, we recovered quite remarkably. The revised estimate for growth in that year is 8.9%. Even considering the fact that this was a recovery from a low base, this is a pretty phenomenal recovery, given the fact that the second wave of COVID was also a part of that particular year. So against that background, if you give us a quick set of thoughts on 2 questions I would pose to you specifically. First, what in your view explains the fall in the growth rate to 4% even before the onset of COVID-19? And 2, how do we want to explain the robust recovery that took place in 21-22?
Thank you very much, Arvind, once again for inviting me. So as Poonam very rightly said, and I know when I discussed the paper, I had mentioned it as well. What was very heartening to see in Poonam's paper was her analysis supporting the view that I had taken at that time, and in many of my media, statements as well. When the question was asked, is this structural? I said it, no, this is not structural. The decline in growth actually has nothing to do with the fundamentals of the economy. The fundamentals of the economy are strong. I think that's what Poonam seemed to show in her paper, highlighting the two key problems, and particularly one of them, the fact that there was basically, the financial sector was badly messed up. And I think we know from, Atif Mia and Amir Sufi's work and IMF work that when, there are problems in the financial sector, the overhang that it creates actually and the cascading problems that it creates are much, much more prolonged than they are when it is with the real sector. And I think that was principally the driver. In fact, in the survey, I've also written that even the NBFC crisis was also a follow-up of the crisis that started with from the banking sector. Second, the export demand actually going down. I think these were the two primary reasons. COVID itself also contributed, and I think that's something the lockdown. Now to second part actually, which is the decline. And I think one point I want to make, and this is in the first chapter of last year's survey in volume 1, we had clearly shown. And I think it is important to appreciate now the need for the lockdown, something that we had actually pointed out very clearly as well. Such a large population and, a communicable disease, spreads through network externalities. Larger the population, larger the transmissions, number one. Number two, population density also matters a lot. Ceteris paribus, higher population density means transmission is much faster as well. Third point, which we have to keep in mind, is that at the time when the first wave happened, everybody was going up the learning curve. Doctors, for instance, were actually using, many medicines and even ventilators, for instance, which they discontinued later. So I think the counterfactual, which we had shown both cross-country and, using cross-state variation and thereby accounting for all confounding factors, was that India saved enormous lives by doing the lockdown. I think that is important to keep in mind. Now, let me come to so the lockdown actually did have an impact on the economy, indeed, but I think, it saved lives, and that was incredibly important. Now, the third part, and here's where actually, I think if you see some commentary that is there, people say, oh, what's the big deal about the recovery? That is the recovery from the, from a low base. I do want to remind that, oftentimes the same commentary also mentioned at the time when the decline happened and actually, talked about the economy really continuing to be in doldrums, that, very, very pessimistic commentary was pointed out. So I think one has to reconcile the ex ante and ex post. One can't have your cake and eat it too. So if it is the case that ex ante, you said that, oh, this is such a terrible crisis, people are going to die, etc. I think you can't turn back then after the event and say, oh, this is expected. I think you have to take a consistent position, and I will say that very clearly. So at least for me, and I said that, there will be a V-shaped recovery, which I was glad that indeed it transpired. For me, it was obvious because it was not due to any fundamental reasons. It was because of the restrictions on economic activity. And once the restrictions were going to be removed, of course, economic activity would be back. So, I was not surprised at all when I made the prediction of the V-shaped recovery, and I was not surprised to actually see the recovery happening. What I was surprised was the inconsistent interpretation, from the ex ante and ex post, from very informed commentators.
Thank you, Subbu. I don't know why you were surprised by the inconsistent commentary by the very well-informed commentators. I see that happen all the time. But thank you for that rather spirited response, with which I certainly sympathize. I think you're absolutely on the spot. Coming to you, Sajid. So you are now the chief India economist of JP Morgan, and you are also a member of Prime Minister's Economic Advisory Council. To frame my question to you, let me begin by noting that prior to the onset of COVID-19, the Prime Minister had set the target of taking the Indian economy to $5 trillion by 2024-25. Even back then, I think, the global economy, even back then, this was a high ambition, and I always thought of that as aspirational target rather than a realistic one. But as we look ahead, risks from the global economy seem to have escalated due to Ukraine-Russia war. We have seen commodity prices, especially oil, spike. And that raises three questions that I want to pose to you. First, what do you think will be the impact of oil shock on growth, inflation, and the current account deficit? Two, how should fiscal, monetary, exchange rate policies respond to preserve India's growth story? And three, how do you see the goal of $5 trillion economy evolve? Meaning, where do you think realistically we can, around what year roughly we can expect to be there?
Thank you very much, Arvind, and thank you for inviting me here. Wonderful to be on this panel. It seems like emerging market policymakers can't catch a break. Subbu spoke about some of the challenges from the pandemic. Barely had we recovered from that you had very elevated inflation in advanced economies. The Fed is going to move, 9 consecutive meetings? When is the last time that happened? And that's going to tighten global financial conditions. And I think the last thing that emerging market commodity importers wanted was a commodity price shock, which is what we're playing out. Now, this will have different elements to it, but I think, for example, India exports wheat. It's a wonderful opportunity to, maximize on that. We export aluminum and steel. We'll import coal and gas, and there'll be negative impacts from that. But I think the first order impact, as you alluded to, Arvind, comes from oil. The calculation is quite mechanical. Every $10 increase in oil increases our net oil bill, net import bill by about 0.4% of GDP. So if you take the calendar year 2021, average Brent prices were $70. If we work with what the consensus seems to be, that average Brent prices in 22 will be $100 a barrel, that mechanically translates into about a 1.2% of GDP negative terms of trade shock. Now, this will have impacts on growth, on inflation, on the current account deficit. A lot will depend on what the burden sharing is between the public sector and the private sector. I know a lot of people will call to say, well, cut excise duties and absorb the shock on the fiscal. But as I've been saying, the growth impact would actually be higher from that, because if you fix the fiscal deficit, for every rupee of lower revenues, there's 1 rupee less of lower expenditures. And in a year where the focus is capital expenditures, that multiplier could be higher. So there'll be a 1-for-1 translation if the hit is taken onto the fiscal. If it's passed on to households and firms, yes, that will compress margins, it'll eat into purchasing power, inflation expectations may harden, but the MPC for households and firms tends to be lower than 1. So there is a trade-off here. I think on the fiscal, the government's done the right thing at the moment, which is to at least pass on the impact for the first $20-25 to the economy, but at the same time increase food subsidies and fertilizer subsidies. So the redistributive impact is on the expenditure side, not on the revenue side. And hopefully this will help avoid cannibalizing much needed capital expenditures, what Subbu had pushed for hard in his tenure. But the bottom line is we can't escape the fact that oil at 100 may shave off a percentage point of India's GDP growth, no matter how it is shared in these 4 quarters, less compared to what you had. The impact on inflation, this was going to be the year where you had goods disinflation. Remember, we were saying supply chains would normalize. Services price inflation may move up as the services sector opens up, but goods were going to disinflate to compensate that. Now you've got another set of energy and cost push pressures, and firms, under pressure to preserve margins, may force to increase prices as the year goes on across the world. So we actually think inflation could be somewhere between 5.5% to 6% in this year. And the third kind of more mechanical impact is the current account deficit. We've been coming off a 6-year period with low current account deficits, strong capital inflows, large BOP surpluses, pressure on the rupee to strengthen. Now we're probably looking at a current account deficit in excess of 3% of GDP. So now, there's not much one can do about this because it is an external negative terms of trade shock. The question is, what is the policy response? In my mind, the most obvious one here is to let the rupee become the shock absorber to the economy. If it turns out that this terms of trade shock is more persistent, right? If it's a 3-month phenomenon, this is all moot. If this turns out to be a 12-month phenomenon, then how do you bring a current account deficit of 3 or 3.5% of GDP down to sustainable levels? There is what we call expenditure compression or expenditure switching. Expenditure compression is where, we have to tighten fiscal and monetary in tandem, choke growth, and bring down imports. And that, in my mind, is not optimal given where we are coming out of COVID. Therefore, I think the most obvious solution here is to do expenditure switching. To the extent that there is a negative terms of trade shock, the equilibrium underlying real effective exchange rate should be weaker. And I think policymakers should gradually guide the currency to that new weaker equilibrium. There is a lot of evidence now that the RBI has cited that shows that a weaker rupee over time will help exports. It brings down non-oil, non-gold imports. These Marshall-Lerner conditions are fulfilled in India, and over time, a weaker currency will narrow the current account deficit. Remember, this is also expansionary. So what a weaker currency is doing is helping you equilibrate external imbalances while also giving some support to growth. So in my mind, the optimal policy response should be letting the rupee become the automatic stabilizer. That, of course, will mean a little bit more inflation at the margin. And that will mean that monetary policy of very accommodative starting points may need to begin normalizing gradually. So just to summarize, Arvind, I think a negative terms of trade shock is not easy to navigate. This is a sustained supply shock, but the new equilibrium needs to be one where you let the rupee become the adjustment mechanism. Monetary policy, because of hardening of inflation expectations, when expectations harden, think of it as a Phillips curve moving up, where the trade-off between slack and prices becomes less favorable. And I think what monetary policy needs to do is avoid second-round effects of this shock from hardening expectations, but do so in a gradual, non-disruptive manner. And fiscal policy, I think, has got the balance right, at least for the first $20, $30, let it pass on to the economy, provide compensating transfers through subsidies, and try and preserve capital expenditure. One last point I'll end with, there is no 2013 taper tantrum here. Let's be clear. While there'll be pressures, India is not among the fragile five. Reserves today are close to $680 billion. So there is no imminent threat to macroeconomic stability. The question is, how do you use instruments at your disposal to best buffer the shock? Very final point, what are the medium-term implications? I've been arguing for 5 years now, oil is a key vulnerability. Why don't we start hedging oil prices in global financial markets, right? Mexico does it on the export side. We know oil is a big vulnerability. Let's have an institutionalized mechanism slowly to build up a multi-year hedging program so we're not guessing about large movements in oil. And of course, we also finally want to, over the medium term, this is tautological, reduce our need of imported crude. But while we get there, at least let's use financial markets to minimize this volatility. But I'll stop there.
That's a very good point. Very good point. Both points, actually, I also feel that, often we have not used the exchange rate very effectively. And when we have used it, it actually pays off. I feel that, one of the key things that drove our growth in after 2003-04 was the fact that the rupee by that time had been sufficiently depreciated that it was actually undervalued rather than being overvalued, which is a rare thing. And even though over the subsequent period, rupee did appreciate in real terms following 2003-04, undervaluation was sufficient to carry the export successes over the next several years. And once again, in 2013, when taper tantrum happened, that was the time we were actually not intervening in the market, in the exchange market at all. And that had something to do with the taper tantrum as well. All right, on to my next question. So Naushad, I come to you next. You are our representative of the industry on the panel. You are co-chairman of Forbes Marshall, India's leading steam engineering and control instrumentation firm. And you are the president of CII for the year 2016-17. If I may paraphrase something that you recently said, this is, I think, in your book, or maybe it's in an article. You have also spent nearly half of your adult life at Stanford. Most recently, you are the author of a wonderful book titled The Struggle and the Promise, Restoring India's Potential, published by HarperCollins India. So to set up my question to you, Naushad, let me first quote from your book. You write, "What is India's future? I deeply believe in India's promise, in our potential for great achievement. I'm also old enough to appreciate our ability to snatch failure from the jaws of success. So elaborate what you mean by that. What is the promise you see, and what might we end up turning, or how we might end up turning that promise into a failure? What advice would you give to the government to minimize such risks?
Thank you, Arvind, and great to be at the Columbia conference and on this panel. And I greatly hope that the next Columbia conference will be in physical form in Columbia when we can all get together. So thank you for the question on the book. Our promise really comes from three things. It comes from our young and aspirational population. It comes from, I think, a very vibrant and diverse private sector. And it comes from a very large NGO sector with a lot of volunteering. Now, that's the source of our promise. Where we might stumble is if we get some things wrong in each of these three. So on the young and aspirational population, we need to invest significantly in education. And you had Karthik Muralidharan on one of the sessions yesterday, I know. And one of his recommendations has now found very prime place in the new education policy to really focus on second standard outcomes to ensure that every child can finish the second standard, being able to read and do arithmetic at the second standard level. That's a really foundational way of providing every Indian with access to enough education so that they can then participate in the world economy. If we mess up on the quality of our primary and then secondary education, then I think that's the failure potential that we have, because we will not tap into and be able to take advantage of the demographic dividend that we otherwise all talk about. Going with that is providing enough employment in good quality jobs. And my definition of a good quality job is very simple and very uneconomic. It's a job where productivity growth in the long run is possible. That's the advantage of manufacturing jobs. It's something you've written about extensively, Arvind. It's something I fully subscribe to. We know how to raise productivity in manufacturing. We do not know how to raise productivity in informal services. And the great bulk of employment that we actually have in the country is in informal services. So figuring out how we can raise productivity in informal services is tough. We need to find ways in which we can employ more and more people in the formal sector. Formal manufacturing, fine. The projects that we've talked about, the industrial parks, if we can really get it right, the coastal economic zone projects that you had proposed, these would be potential powerful labor-intensive ways of putting millions of people to work. And then tourism, I think, which is also a high-quality job opportunity. Second, in terms of the vibrant private sector, here the action required really is entirely within industry. I think industry needs to be much more outward-looking than it is today. We need to be much more. We need to embrace ease of imports and ease of exports. And we need to see tariffs on imports as a tariff on exports, as a tax on exports. We need to change our mindsets so that Indian industry starts seeing international markets and free trade as only good for it in at least the medium and long run, and I would argue even in the short run. But this is a mindset change that we need to bring about quite widely in Indian industry. We can talk maybe more about that later on too. Second, and going with that, is that Indian industry, as many have pointed out, is more skill and capital intensive than industry normally is in countries at our level of per capita GDP. And if we have a skill and capital intensive industrial structure, then the only way in which you can have vibrant manufacturing is if you also have significant technological effort and if industry builds proprietary technology. So we need to invest a significantly greater amount in in-house R&D. And as I've argued, we invest currently, Indian industry invests 0.3% of GDP in in-house R&D. The world average, the Chinese average is 1.5%. We need to scale, in other words, our investment in in-house R&D by a factor of 5 within companies as a way of building long-term proprietary technology over time. Third, in terms of our vibrant NGO sector, the estimates for the number of NGOs in the country runs into the millions, which I think is counting probably everyone's socially committed grandmother. But we have a very wide, diverse NGO sector. I think the failure potential is when we start making policy on the basis of a few bad apples and distrusting the wider sector because of a few bad apples, instead of making policy on the basis of trusting the great bulk of the sector, to be honest. So the restrictions that we've recently brought in on FCRA regulations, I think are damaging. I think the recent things that we've done with CSR funding from companies, where CSR funding cannot be used now to contribute to the corpus of foundations, I think is a mistake. I think we should trust the sector to actually deliver as the great bulk of NGOs really operate. They operate from a principle of integrity and commitment, and we should trust them to operate on that basis. Last comment. You asked me about what would I advise the government. I hesitate to advise the government when Subbu's on the panel and can speak to that much better. My instinct says that in a country like ours, the role of the government is essential, but it should also be limited. They should try to do fewer things and just do those fewer things much better. And then for the other sectors and the other areas, get out of the way. So those few things that only the government can do, let's do much better. So let's do criminal justice and policing much better. Let's do financial regulation much better. Let's do the tax system better. Let's do public health better, and let's do public education better. And for the rest, get out of the way and let the private sector and NGOs get on with it. I'll stop there. Thanks.
Thank you, Naushad. There's a lot there. I hope, we will return to some of the themes. Actually, all three of you have outlined quite a bit. Issues of firm size, issues of specialization in skilled and capital intensive industries, issues of connect to the global marketplace, and so forth. So let us return to some of those. But before that, I want to come to you, Praveen. You are a professor of economics at Johns Hopkins University, and you are our only pure academic on the panel. But at the same time, you specialize in international trade, student of Jagdish Bhagwati. So you can't escape policy, and which is the reason you are here. To set up my questions to you, let me begin by first noting that the Modi government has introduced some really big ticket reforms in recent years. There are four that I've been mentioning in particular, and I'll repeat them here: the Insolvency Bankruptcy Code, the GST, labor laws, and a globally competitive corporate profit tax. And then infrastructure buildup, I think, has picked up very nicely as well, including the digital infrastructure, about which we talked yesterday. So these are the reforms which will undoubtedly pay dividend down the road. At the same time, there has been reversal in one key area. In fact, India's reforms in 1991 had begun, the beginning point really was the trade liberalization. And that was really undertaken consistently with also a gradual depreciation of the exchange rate, steadily rolling back of the tariffs to the point that, the highest tariff rate used to be something like 350% in 1991. And we rolled back with some exceptions. By 2007, the top tariff rate to 10%. You still had some kind of, a few sectors, textiles, clothing, automobile, auto parts, etc., which still were outside of this 10% rate, top rate. But largely, I think, most tariffs had been rolled back to that level. And yet, the tariff rates, these tariff rates stayed actually to that level for quite a while, but in the last 3 or 4 years, particularly, they have been tariff reductions have been rolled back, and tariffs have really risen. You can look at the data. There is plenty of evidence of significantly higher tariffs today. In the policy also, in the pronouncements, you see that import substitution is clearly very much back on the agenda. This is something like, that happened for a decade in Korea, in South Korea as well, after one decade of very open economy from 1963 to 1973, Korea had also kind of gone into this heavy and chemical industry drive, which was characterized by similar import substitution. One of the key sectors which is often being mentioned now is the mobile phone industry. And sure enough, if you impose tariffs, you would create profitability in the particular sector in which you are providing the protection. And we did that in mobile industry. And from a peak of about $7.5 billion worth of mobile imports in 2014, mobile imports fell to about $2 billion in 2020. I suspect that the current figure is even lower. Some exports have emerged as well. And a fairly large mobile industry has been established in India as a result. So now I want to ask you, how do you see this strategy overall related? How do you view tariff rates that are 40% or higher? In some cases, like automobile, these go beyond 100%. And also say, if you can, something about, this strategy we used to call the PPM. This was the pre-liberalization, pre-reform strategy that we used to have, that phased manufacturing program, whereby first you would protect the assembly industry, and then you go to the components, and then you go to the machinery that produce those components and all, and some of that seems to have returned as well. So if you're a trade economist, it's a large number of questions hidden behind what I have said. So take your pick, how you want to address that, and tell us what you think. Praveen?
Sorry. Thank you, Arvind. It's been a great conference so far. I'm really delighted to be included on this panel with truly distinguished co-panelists. Let me start by agreeing with the broad premise. So first of all, I fully agree that the Modi government has kind of put in place a bunch of important reforms. You mentioned these already, GST, labor law reforms, and so forth, all of which incrementally one could hope would increase productivity, competitiveness in the system. And amidst this sort of set of important reforms and positive reforms, the one area in which policy seems to move backwards is in the area of trade policy. And I see that in maybe 3 different areas. One, which you've already mentioned, which is tariffs and tariff policy, directly tariff increases. A second is kind of the overall attitude with respect to participation in trade agreements. And a third, perhaps slightly indirectly linked, but sort of along the lines of kind of import substitution policies, is the production-linked incentives policy that the government has put in place. So three separate chunks. Let me come back and start with sort of tariff increases. So it seems fairly clear that, so first of all, tariff increases, there have been many tariff increases that have been announced since 2015. I think over 3,000 line items have been increased out of a total of 12,000 or 11,500 or so, covering about 65 to 70% of Indian imports. So that's a substantial reversal in terms of the kind of the policy direction of kind of increased liberalization that we've seen, if gradual since the early 90s. And so what about the magnitude of the tariff increases? By how much have these tariffs increased? The calculations can vary a little bit depending on how one aggregates up tariffs and so forth, but roughly speaking, we're talking about an average of maybe 12 to 13% average tariffs, weighted average tariffs in around 2015 to about 17, 18% now. So it's about a 5% increase, 4 to 5% increase in tariffs on about 70% of imports. So that's actually fairly substantial. And at some level, given India's kind of unhappy history with trade protection and import substitution policies in the post-independence years, as an economist, at least one kind of reflexively reacts negatively to this. And I think we should all be worried about what this signals in of itself and what it signals in terms of the future direction of policy. Is this it, or are we going to see further increases, and where are we headed? Let me say one thing here, which is going to come to the example that you mentioned on mobile telephones, and the fact that India's kind of increased production, decreased imports, and increased its exports as well. This story of the mobile phone success, quote unquote, is cited very often as an example of success, this particular history. But I'd raise a couple of questions there. One is, what is it that we're actually trying to achieve here? If the goal of policy is to decrease imports, then a short set of tariffs or various other things can kind of choke off imports, and you can have import substitution and prevent any imports from coming in. If the goal of policy, as it's sometimes stated by those in New Delhi, is to actually have production taking place in India for the world overall, then we really have to ask ourselves, how successful have we been on that dimension, right? And so there we could compare ourselves with other countries in the same industry. Vietnam, how has Vietnam done? And there that sort of story loses a bit of its shine. I think if you compare what's going on in terms of mobile phone exports, for example, in Vietnam, those numbers are many than India. So that number looks very large. If you go broader and say what's happened in electronics, the ability of the Vietnamese to kind of export electronics to the rest of the world is also substantially higher, maybe 10 times higher than India. And so that's a question for me. I don't doubt that tariff policies could decrease imports, but how is that somehow helping us to do better in global markets? I don't think so. And certainly this particular industry, which is, like I said, cited often as a success story, doesn't provide any basis for us to be hopeful about that. There are longer run issues as well that one could worry about, having to do with just the political economy of protectionist regimes. And actually India, as a kind of case study between maybe 1950 and 1990, offered a lot of lessons to the world about how things could go very badly, how you have rent-seeking behavior, how there's entry of inefficient firms with protection, how there's kind of a reduction in incentives to innovate and become more competitive over time and so forth. Of course, during that period, what we were experiencing in India were very, very high tariffs, as you mentioned. Top tariffs were in the 350% range. Average tariffs may have been in the 60, 70% range. And we're not quite there yet. So I should be careful not to be super alarmist about this kind of reversal in policy and say, we're back to the world of the 1960s and 1970s. And yet, one has to worry about that a bit, and one has to fear if this is the direction in which policy is going, if we're going to be hearing more and more about self-reliance and import substitution and so forth, where we actually end up. Let me make two quick points, if I have another minute, about free trade areas and production-linked incentives and so forth, and maybe we could come back to these if there's interest in the panel or from any members of the audience. On free trade areas, there's been kind of a narrative out there that India signed a number of trade agreements, and that these trade agreements were harmful to India, that they harmed India's manufacturing successes and so forth. And overall, that nothing good has come of these, and therefore we should stay away from this. I'm not arguing necessarily that the government subscribes to this point of view, but there is a narrative out there pushing this point that FTAs have been bad. And I think there's very little evidence to support that. If you look at what was the trade share of the kind of trade that took place within free trade areas relative to overall Indian trade, either on imports or exports, that has actually not moved very much at all. If you look at trade deficits, which policymakers are actually worried about, and you say what fraction of trade that took place within trade agreements, how much did that account for overall trade imbalances? And then that number is actually decreased, both with ASEAN as well as the 10, 11 trade agreements that India signed. And the reasons for that at some level are very simple. One is that most of India's trade agreements have actually been signed under the enabling clause. There's a bit of a subtle point maybe for the audience, but worth mentioning, which is that unlike your typical Article 24 kind of WTO, Article 24 trade agreements, which require very, very substantial amounts of liberalization, most of India's trade agreements have been signed under what's called the enabling clause, a special window for developing countries to sign trade agreements in which trade liberalization that's undertaken could actually be much more limited. And in fact, if you look at tariff reductions that have been undertaken on both sides within the kind of enabling clause agreements that India signed, then it's actually been very, very limited. For most of what India trades, there's been no trade liberalization undertaken at all. And so these are free trade agreements only in name for most part. They don't really have the bite of the genuine, what a more substantial, broader, wider, deeper trade agreement would entail. And so overall, I think, this is not a particularly good framework for us to be thinking about what the effects of a trade agreement might be. These are not substantial agreements. But to the extent that people are worried that they somehow harmed India or worsened trade imbalances and so forth, I would argue that is not the case. So on both of these, I think to the extent that the worries about trade agreements sort of pushed India to kind of move out of RCEP, the Regional Comprehensive Economic Partnership that India was kind of contemplating getting into, I would say that particular concern at least was somewhat unfounded. Of course, in the context of RCEP, we were dealing with a rather different beast, which is China, and the implications of kind of a free trade agreement with China would be different from what we've experienced with other agreements, and there's kind of good sides and some challenging aspects to that as well. And let me leave it at that. My overall point is that I'm worried a bit about import substitution policies kind of setting in, taking us in the wrong directions. Maybe changes have not been sort of super dramatic yet, but I think we have reasons to worry. The last thing I'll say is that if we're looking at this policy as the solution to the original challenge, which is how does one increase exports, how does one increase employment of our many, many millions of low-skilled workers that are entering the labor force, et cetera, every year, I don't necessarily see this as the way that the path that is going to bring us success. If this is all that we're doing, what we really need is going to be, of course, to increase competitiveness and productivity and so forth, a whole range of different challenges that are almost orthogonal to this issue of trade protection. And let me stop there.
Thanks, Praveen. You have ended at a good point, and I want to raise now a question that comes out of things that many of you have already said. But let me articulate the question this way. Overall, it seems to me that there is a huge amount of underemployment in the economy. Now, you mentioned, Praveen, this as being manifested in the low productivity. Naushad kind of phrased it as, the bulk of employment being in skill-intensive and capital-intensive industries, which means that, much of the unskilled or low-skilled workforce is in activities where very little capital gets used. Effectively, once again, resulting in very low productivity, which you can call underemployment. You can also see this in terms of, if you look at value added per worker, say in agriculture, versus industry and services, there is a difference of about factor of 4, meaning that the productivity in agriculture, average productivity of labor in agriculture by value added is about 1/4 of what it is in industry and services. And in industry and services themselves, actually, it is not super high. You can look at it in terms of firm size. about 45% of the workforce in agriculture. You got another 45% in enterprises, in industry and services that are less than 10 workers. So these are all low productivity employments. So often people say that India has a huge unemployment problem. I like to say it's not really unemployment. Everybody is doing something because income levels are so low. You've got to do something to make your ends meet, get your 2 square meals a day. What we really suffer from is this underemployment, whose manifestations then are in terms of firm size, excessive employment in agriculture, where also, by the way, we suffer from very small sizes. If you look at the half of India's farms are less than half hectare, of which only the average size is even less than a quarter hectare of these half of India's farms. So again, this big productivity issue. And it seems to me that ultimately, unless we really create conditions which move this workforce out of agriculture into industry and services, and that also in decent size enterprises, we are really not going to get to that transformation. And no country has really become rich without actually bringing the agricultural employment down to at least 20-25%. So that is where we need to go. So Subbu, I want to come to you. Now, you wrote about this in Economic Survey as well, I believe, in terms of our firms being dwarfs, not growing bigger, and so forth. So slice it the way you wish to. Others, please also think about it. I think this is a big picture question, the big important question on which we ought to ponder. A lot of dimensions to it, meaning, Rana talked about urbanization, for instance, because without urbanization, you can't have this kind of transformation happening either. So urbanization also ties into this in a very sort of major way. Land issues tie into it, labor issues tie into it. So slice it the way you want to. I want to come to each of you, get your thoughts on this. Take 3 or 4 minutes, no more than that, so that we can get the views of everybody in time. So Subbu, with you.
Yeah, thanks a lot, Arvind. Actually, before I just respond to that quickly, I want to say I want to second what Naushad said in terms of what the government should do. And I think the 2019-20 survey on ethical wealth creation was precisely along those lines. Reduce government intervention, privatize more, and many other, reduce some of the crony aspects that used to prevail in the 2004 to 2014 era, etc. I think the point you're actually mentioning, I find general consensus on this aspect. I think even from a macroeconomic perspective, if we have to have a consistent increase in consumption, the level of consumption, I think formal sector jobs in manufacturing are extremely important. If we look at it from Milton Friedman's permanent income hypothesis, consumption goes up only when there is a increase in permanent income. And I think that a job provides not only from what we economists call the first moment effect, but also the second moment effect, which is reducing uncertainty or actually the volatility in income, and which is important for consumption as well. And I think one of the key points here I actually find is, yes, skilling is a problem, that needs to really be invested on as well. But at the same time, if we look at a lot of the products and services that are also created by the private sector, they are focused primarily on the top 20 to 25% of the income pyramid. not enough going beyond. I think there are two salient examples that buck this trend, which is microfinance and FMCG. These are two sectors where there are products and being created for the bottom of the pyramid. And I like to think about it that basically products and services catering to the cash flow stream of the poor. The reason I mention this is because given a lot of the segmentation there is in our labor markets, I think this is this sort of in some sense Say's law working is important as well. So any push along that dimension, mimicking what is happening, what has happened in FMCG and microfinance, where products and services have been for the bottom of the pyramid, I think that could be a trigger. Of course, we have, if you look at the policy response and overall what has been done post-COVID, the clear recognition has been that all our policy responses have to be in making our factors of production far more productive, far more efficient, and actually, bringing in a lot more competition. If you ask me a 30-second response, I would say 1991 was about, expanding or removing, some of the obstacles in product markets. This set of reforms is about actually bringing competition in the factor markets, be it capital, be it labor, and even I look at it actually, even total factor productivity itself. And there the phenomenon of dwarfism actually is something that is really important, because our firms are so small, they're not able to avail economies of scale. Their average costs are much higher. Because their average costs are much higher, they actually cannot compete in global markets. Because they basically cannot do as much with imports either, and that's why a lot of the protection as well is also endogenous to actually this this kind of structure that you see, the distribution of firms. So I think without really addressing some of these issues that actually lead to productivity itself being very low and thereby the inability to compete, I think we can keep talking about till cows come home about some of the protectionism, that sort of drive towards protectionism. But I think it is important to dig a layer deeper about the political economy and then actually also fix some of these issues. And I think the reforms, be it on the labor side, changing the MSME definitions to increase scale, some of the PLI scheme itself, which Praveen mentioned it actually, but I would say, the intention there is to actually incentivize growth and not just basically democratize, the taxpayers' money. So this and other aspects, some of the power, logistics, reforms, all these are factors of production that actually need to be, as the costs on each of them actually come down, and the second moment uncertainty also comes down, that will really actually generate this cascade where our firms will become more productive. They will be able to export a lot more as well, at the same time also compete with imports, which will then reduce the sort of the drive towards the kind of push towards trade that we are seeing. So I think it is important to actually go a couple of steps backwards and start working from there.
Let me come to you, Naushad. The issue in my mind remains the firm size and connectivity to the global markets. Now, these are connected issues because, there is ample evidence, very clear evidence internationally, even from Indian data, that ultimately it is the larger firms that get connected to the global marketplace. And the connect of the smaller firms to the global marketplace comes through these larger firms. So becoming ancillaries of these global sized large firms. Coming from the industry perspective, how do you see this? Why is it that even the focus of our industry often remains inward-looking to the domestic market? But in the end, unless the target is the global marketplace, we're just not going to get there. It seems to me. So take your pick how you want to do it. But from the industry side, it'll be good to hear how you see the picture.
I think you're right. I think there are too many Indian firms that still see their market as India, and there are many that have changed but it's not so much sectors that have changed as firms that have changed. So, you can find chemical companies, you can find auto companies, you can find services companies that are very active internationally, but they are individual firms, and they're stories of individual firms that have been hugely successful overseas. Those firms you don't hear in public discourse adequately in India. The ones that you hear are the ones that are inward looking. So, for example, on RCEP, which Praveen referred to, it was opposition from Indian firms that really drove, if you ask me, our finally moving away and not joining RCEP, which I thought was very unfortunate, because Asia is this very vibrant, attractive market for us in the long run. But if you looked at, we did a survey within a group of about 150 leading companies in the country. And when we did that survey, we found that 57% said that it was a mistake to drop out of RCEP. 27% said it was right for us to drop out of RCEP. But when we went around and talked to firms, what we generally heard was the firms that were willing to talk and keen to talk were the ones that were against RCEP. So I think we hear publicly this voice that is against being international, that is more inward looking and so on. And the firms that are really international and successful are perfectly happy doing business all around the world very successfully and not saying anything about it. So I think actually one of the roles of an industry association should actually be, and it's something I've been pushing, should be to give voice to the firms that really want to engage with the world, that are outward looking, that see foreign trade is something that we should be engaged with. So we need to give those firms a much more active, clear, loud voice. I wanted to add a comment actually on employment. I think Indian industry can do fine if we become more outward looking and we invest more in technology. But that doesn't mean that employment in industry will do fine. I think for employment in industry to do fine, we need to have the right growth in the right sectors. So we need growth in garments, in footwear, in food processing. These, as we know, are the labor-intensive sectors worldwide. Why is it that when garment production moves out and footwear production moves out of China, why is it that it moves to Bangladesh and to Vietnam and not to India? And I think, why is it that a large garment firm in Bangladesh employs 30 to 50,000 people, a large garment firm in India employs 3,000 to 5,000 people? I mean, why is it that Indian industrialists in these sectors do not see that their future lies in labor-intensive manufacturing? I think it's a legacy of the past. It's a legacy of having had poor labor laws for a long period of time. I think it's going to take time to change. I think we have to persist with it for a while. And keep getting this message across that, listen, there are attractive opportunities in labor-intensive manufacturing. Maybe we need to get, a Li and Fung to set up a large garment park somewhere in India and employ 100,000 people and get, as we are trying to do very aggressively, get Foxconn to set up good assembly plants in India that employ 100,000 people. And maybe a few of those examples will start then being copied by more and more Indian industrialists who will see an attractive future in labor-intensive manufacturing. But unless we do something like that, I'm much more confident of Indian industry doing fine. I'm not so confident of labor-intensive manufacturing doing fine unless we do something like this.
Sajid?
Arvind, I think I'm preaching to the converted here, but let's just back to first principles. No emerging market has grown at 7 or 8% for a decade or more without strong export growth. So it just hasn't been done before. Now, apart from the necessity for exports in sustaining overall GDP growth, as you've laid out brilliantly in your book, Arvind, it puts endogenous pressure on the reforming India's fragmented industrial structure. Rana is over here. Rana gave us some very revealing data. Naushad asked why the apparel opportunity moved away from China to Bangladesh and Vietnam and not to India. And Rana's work from 2005 revealed that there were 92% of workers in India's apparel industry were working in firm sizes of 50 or less. And there were about 60% of people in China's apparel industry that were working in firm sizes of 200 or more. So how can a 20-person firm in India compete with a 200-person firm in China in the global marketplace? But the key point is that two things I think are important. One is, given shrinking working age population in China, and given that Chinese real wages are increasing, China has vacated a lot of these labor-intensive, lower value-added manufacturing space, and we need to fill that space. And secondly, I think a sustained focus on exports puts endogenous pressure on firm sizes to grow. Because I think that's what we found in India, is when a small firm becomes a large firm, that you get more better paying, more secure jobs. So exports have the dual growth of being necessary for GDP growth, but also an export orientation puts this endogenous pressure on the fragmented industrial structure to change. Now, the bad news is, this is not the early 2000s when there was a wave of globalization and a rising tide lifted all boats. In fact, my point is going to be that over the last 5 years, we've seen very disturbing influences that are moving the other way. It began with the US-China trade war, and that led to some deglobalization impulses, both for tariffs and for cross-border investment flows. Things got accentuated in the pandemic when there was talk about, let's bring home some of these supply chains, regionalize them, reduce their globalization. And now, given what's happened in the last 4 weeks, whether it's the economic sanctions, the impact on SWIFT, the impact on central bank reserves, these are all going to increase impulses of the world possibly moving into different trade and currency blocks and becoming more and more deglobalized. And India's challenge is going to be, how do we sustain close to double-digit growth when you've got external headwinds, not external tailwinds like we did in the early 2000s. There's no doubt that this is still a huge opportunity. The global export market is 5 or 6 times India's GDP. So the opportunity is there. But this will have to be a harder slog of actually increasing India's export share in the global market, rather than just relying on that market to grow, given these deglobalization forces. So the challenge is very real, but it's imperative if we have to sustain 7-8% growth for decades to come.
Thanks. Yeah. No, I sort of agree with a lot of what you have said. Where I sort of differ is the fact that ultimately what we are lacking is the share in the global marketplace, which is very low. So even if there is some decline in this overall size of the pie, that pie is extremely large. I mean, you've got $19 trillion roughly in merchandise exports, another $6 trillion in services exports, $25 trillion. We are, our exports are only about, in merchandise, it's about 2%, in services, 3.5%. Look at China, 12 to 13% share in the merchandise exports. So I personally don't feel so pessimistic about the global marketplace because of this global reconfigurations in the geopolitical environment. Trade share, total trade might decline. First of all, I don't expect it's going to decline by a huge sum. That's not going to happen. Determined exporters always find ways to send their goods around, as we are seeing actually even in the context of the current embargoes. That in my full understanding, the only embargo that was truly successful was the one against South Africa, against apartheid, because everybody joined in. But when this happens partially, trade flows have to reconfigure, but they reconfigure, and the trend we have seen is global trade has continued to rise, actually, generally speaking. So it's really how to get the share kind of rising. Sorry, you were going to respond, Sajid?
No, Darwin, just 30 seconds. That was the point I was trying to make. And sorry if I didn't make it as eloquently, that we won't be relying on the pie necessarily becoming bigger faster. It's the share that has to go up. The issue has been India's manufacturing share has been stuck around 1.7% for many years. And so we need determined policy reform to push the share up. As you rightly said, if we can double our share or increase it, there's a huge opportunity there. But we need a coordinated set of reforms to push that 1.7% up, and therefore capture the opportunity. That was my limited point.
100 rupees to the dollar.
So let me come to you, Praveen. So here there has been some switch now. We haven't spoken, we haven't come to this. We got to the negative side of trade policy in India, but there is a positive side opening up now, and that is on free trade areas. So India has actually signed one with the UAE. And at least yesterday, I saw one report which said that today, perhaps, or maybe it was tomorrow, the one with Australia is going to be signed up as well. And the one with Australia, of course, is in some ways very significant because this is a developed country. So it has to be under Article 24. So this will be, substantially all products will have to be liberalized, and tariffs would have to be knocked down to zero. Between Australia and India, not to some partial kind of reduction in tariffs, which is what is permitted under enabling clause. So now there is also talk of the FTAs with the United Kingdom, with Canada, and a big one, which is the European Union. Now, European Union might take a little longer, probably 1 to 2 years. But if all these agreements get signed, then it seems to me that some major kind of scope for the expansion, not only of trade, but investment into India opens up. Because then what you are seeing, and if we could also go back a little bit to the countries to the east. Prime Minister actually talked 2 days ago about BIMSTEC. So this area could all be turned into free trade area. It's a contiguous area. BIMSTEC area for India is all contiguous, and then it connects back to ASEAN, where we do have an enabling clause free trade agreement. But if it could be converted into something equivalent of an Article 24 FTA, that becomes a very large, actually, ASEAN, and then you got to Korea, with which also we have a free trade agreement. So Korea plus ASEAN itself is about $4.5 trillion economy together. So that really does open up then a large space, and it must also become then much more attractive for foreign investors to come in and invest here. So this is kind of my preface to you. Slice it again the way you wish to, in the context of what others have already said.
Thanks, Arvind. One quick thing I want to say on the previous points that were being discussed about scale and firm size and so forth. I just wanted to add one observation that one doesn't see quite as frequently in that discussion, which is that if you look at the customs transactions data for India and you see who are the actual exporters and what fraction of exports is being accounted for by the large exporters and so forth, that number is also equally revealing of this particular issue, which is to say that it's just a very small number of Indian exporters out of 110,000 or 120,000 exporters per year. I would say a handful, maybe not a handful, maybe 400 or 500 of these account for maybe 95% of the exports, or something, at least certainly 90% of the exports. So that size distribution thing is very important. You see it in firm sizes directly, as many people have documented. I think we've seen it in the recent economic surveys. Rana has been working on this for a long time. You yourself have talked about this in many different venues, but you directly in the kind of the trade data as well. That's something that's seen, and it's kind of clearly something that needs to be worked on in terms of how we kind of move forward. And now coming to the issue of free trade agreements, I was going to, so first of all, I completely agree with you that these are important opportunities for us. But I would pick the last point that you made as perhaps being the most relevant, at least in my mind, which is these potential reductions in trade frictions with the countries in East Asia, right? So as I see it, kind of UAE, Australia, etc., these are kind of final goods export destinations for us. But what we really want to do is to kind of get into these global value chains. And given the nature of kind of production fragmentation, and everybody's now familiar with all these statistics of how many different, intermediate inputs go into the production of an iPhone or various other products in the world, then what you want is kind of frictionless trade and a frictionless ability to kind of join that part of the world that's producing all of these inputs and assembling them, here or somewhere else in China and so forth. And so I think that would be very, very important. And in a certain sense, getting into a free trade agreement or expanding the scope of our getting freer trade with ASEAN, with whom we already have a kind of a limited set of kind of trade understanding with in the context of our own free trade agreement with them. Expanding that, it's a little bit like what we did with GST within India, right? So you kind of take away all these kind of interstate trading restrictions, interstate trading taxes, and you hope to get enormous economic and efficiencies from that, from the smoother flow, smoother integration in terms of production networks and so forth. And if I'm not mistaken, I mean, at least the last set of statistics that I've looked at, these are, I think, from 2017, 2018, of all of the countries in East Asia, et cetera, India's participation in kind of global value chains was basically the lowest, right? So we're roughly, in terms of what fraction of our exports are part of these kind of global production networks, I think it's less than 1/2 that of China, roughly 1/2 that of many other countries. And so that's going to be very, very important for us to increase our production efficiencies, bring in foreign direct investments that kind of, exploit all of these kind of frictionless trade with other partners in East Asia and so forth. So I hope that that's the direction in which we do go in terms of expanding our, I think that part of it is going to increase our production efficiency. And the free trade agreements with the United States and the UK and the European Union and Australia and so forth, these increase our market access in terms of where goods are finally sold. So both of these things would be excellent. Now, the one thing I would say is we have already signed a few kind of Article 24 agreements, right? So we have one with Korea, one with Japan, and one with Singapore. So I think these are the 3 out of the 12 or so agreements that we've had. That are kind of regular free trade agreements from the World Trade Organization standpoint. But in each of these, if you look kind of closely at the details of the agreements, what India did was to negotiate sort of a phase-in period that was very favorable in a certain sense to India, which is to say that all the liberalization that we would undertake would take place, 10 years later, 15 years later, and so forth, right? So any agreements that we sign today, I worry, let's say with the UAE or, expand what we're doing with ASEAN and so forth, I worry that by the time these things are actually written and done, the phase-in period is going to be another 10 or 15 years. So the true effects and the benefits of the agreements are not going to be felt right away. We're talking about, a long period before we actually benefit from the kind of things that we're hoping to see in the discussions that we're having. So there's some way for us to discipline our own negotiations so that the benefits can be achieved even sooner, that would be great. When I looked at the India-Japan Free Trade Agreement, my recollection was that, so the agreement was signed in 2011, and we had saved most of our liberalization for the period after 2020, right? So I'm not sure what's going on with all of that. Maybe that's been delayed as well because of COVID, but essentially to say that it was all in the very last year, the 10th year after the reform that our liberalization would be undertaken. I hope we can do a little better in other agreements that we get into.
Yeah, I mean, I sort of just one correction, by the way, on South Korea and Singapore. South Korea is a very interesting one because South Korea has informed that agreement to the WTO under Article 24. India has informed it under enabling clause. Apparently, it is allowed.
My understanding of that was that South Korea for a long time was resisting being taken out of the developing country status of the WTO.
Singapore too.
As you recall, it was a sub-declaration. And so for many years, they wanted to benefit from that. And at some point, I can't remember the year, but they were forced not to do that anymore.
No.
Is that not the case?
Both Singapore and South Korea continue to have the developing country status.
Right.
But they did actually, so both of those FTAs, India has informed under enabling clause, not under Article 24. So we still, that reinforces your second point, of course, which is that, we try to delay it. But even so, I'm sort of less pessimistic on this, because all right, so but that will be 10 years down. But firms that are really keen, look at the market, how it is going to look over the next 10, 15, 20 years horizon. And that will still, I think, impact the investment decisions of the firms. So I'm less kind of perturbed. Let us go in and sign, and particularly with the EU, if we do it, I think that's a big one that also sends a good signal. It's okay. I mean, if we are not going to liberalize in the next 5 years, I can live with it as long as then the liberalization does come in.
Let me say one quick thing there, Arvind, if you don't mind, which is that a lot has been made in the comparison of kind of India's exports in textiles and footwear and so forth relative to Bangladesh and Vietnam. But one thing we should say in India's favor is that at least one part of the story, one part of the reason why Bangladesh has succeeded and Vietnam has succeeded is because of their duty-free access to the EU market. So Bangladesh has excellent access to the EU market under the Everything But Arms Agreement. That's not the entire story. They've done many good things as well. But a part of that story is also that they've had that duty-free access. So I'm just supporting your point, really, that if we got ourselves duty-free access too, then that at least puts us, at least from a market access standpoint, on an equal footing with our neighbor.
True, and it's going to change the expectations. But I also feel that our own liberalization is extremely important as well. That also goes. Returning to you, Subbu, you can proceed along the lines you want to, but one area I'm now want to go launch this a little bit into what are really the policy levers that the government could really touch on. Exactly what are the policies. In the end, we have all identified, what needs to be done. And like you pointed out, well, some of these products which would address the bottom 75%, not just the top 75%, FCMGs, etc., microfinance and all. But the ultimate issue really is, what are the policies? And one of the things where it seems to me still big problem remains, which is not the central government issue, unfortunately, but maybe central government can play a role, is this issue of land. I mean, at the end of the day, large firms, and very recently, I'll give you the example. We are talking about the semiconductors industry. India has also sort of put out about $10 billion worth of subsidy under PLI scheme for the setting up of the semiconductors industry. And yesterday, Noshir Kaka seemed to be very optimistic about the success of the semiconductors industry in the coming years and all. But compare that to the United States, right? 1,000 acres of land is being allocated for just one factory on semiconductors. So land-wise, and not only land is difficult to get in India, but it is also very expensive. With the particularly after the Land Acquisition Act, even for the government, it has become very expensive. So anyway, if you address a little bit of the land issue also, but in general, whatever, I want us to move a little bit onto the policy levers. What can be done policy-wise to make this happen?
Yeah, a couple of points I want to highlight first, Arvind. I think over the last 20-25 minutes, our discussion has been focused on trade issues, and I think rightly so, given that you are chairing the panel. But I do want to also, highlight some of the other areas, and these are the action still is going to happen. But do notice that as part of the Atmanirbhar Bharat announcements, there was actually a policy, that has been put out for privatization and for closing down, at sectors as well, where clearly the government has said that, except for 5 or 6 strategic sectors where there will be, maybe 4 or 5 PSUs, rest of them will be either privatized or will be closed. And I think from an efficiency perspective, and I think in this audience, we don't need to even explain that. That's a very important statement of intent. I do agree that we need to basically move on, and I think timelines need to be put out. In the same breath, the privatization of 2 public sector banks, I think for me, and I'm sure, Arvind, you faced it as well, having been, from the other side. I think, especially because these public sector banks have always been seen as a bellwether of the nationalization drive. I think it's again, as a statement of intent, is a very important announcement, and hopefully this year will be when it'll actually get announced. Similarly, Air India, and I think privatization. So this is an important aspect too, which is I would put it down as part of factor markets. If you think about it, labor capital and total factor productivity, privatization, much like focusing on firm size, I think are very important from the total factor productivity perspective. On trade itself, there are a couple of points I want to add, because you asked me on the policy part. I think what is very important is, especially when it comes to firm size, and actually, in some of the discussions that the political economy is basically as follows, and I think that's where some of the difficulties start coming in. That the truth is that firms that start young and small grow, they are the ones that create jobs. The firms that grow are the ones that, but once they grow, they become big. But when you look at it in a static perspective, whenever you look at it, let's say in a static perspective, it looks as if it's the small firms collectively that are creating a lot of jobs. But when you look at it dynamically, it is the firms that grow that create the maximum jobs. Pete Klenow, for instance, in this QJE paper shows how a firm in the United States, 30-year-old firm, creates almost 7 times as much jobs as it did when it was 5-year-old. In India, that number is only 40% higher. And this is an important. So the policy, prescription here is to, rather than focus on small versus large as firm size, I think, and this prescription we had made in the economic survey as well, is to actually focus on young and versus old. And this phenomenon of WAS, for instance, maybe grandfathering and sunset clauses, that there has to be some sunset clauses for some of this protection to be taken out, and it has to be a firm commitment, not a sort of a watery commitment. That's one key aspect. In a second, from and I think this is all the stakeholders in the ecosystem itself on trade need to recognize that none of us actually learns to run without having learned to walk. And in the context of trade, that does mean, if you look at it, for instance, the automobile sector in India started with assembling, but then actually integrated backwards, and a lot of more value-added activities started happening. And I think the evidence we've provided, of course, you've done an enormous amount of work in this, Arvind. But typically, when we look at trends, actually countries like Japan, China, etc., didn't immediately start doing the value-added. And I think the ecosystem needs to recognize we shouldn't be so Brahminical to keep saying, oh, only value added. I think allow for that dynamic, actually, and endogenous, sort of development of the value chains to happen as well. Whatever comes, actually, especially labor intensive, and I think this point that Naushad made, I agree with, because India, for it to actually increase its level of consumption and thereby investment, anticipating consumption, it is incredibly important that we create jobs in the manufacturing sector. Even if it isn't assembly, so what? I think those are formal sector jobs. We should basically, sort of enable them. So I think the emphasis on land, labor, and I think now state governments should really, focus on, on enabling. Some states have passed these labor laws, but I think notifying it, and enabling those actually are incredibly important. Much the same way land as well. I think your point on economies of scale through land, all these factor markets, I think is very important, and that would be the point of emphasis that I would say for policy, both at the central level and the state level.
So let me shift gears in our remaining, 15 to 18 minutes. Sajid, I want to come to you. Now, one thing that is worrying, that's coming out of the current conflict between Ukraine and Russia, is that a possibility has certainly arisen that the global economy may begin to fragment. And particularly, right, for instance, this access to SWIFT having been denied to Russia, and Russia then trying to, reconfigure with China through an alternative payments mechanism and all. And if this kind of fragmentation begins to happen, right, therefore the global economy really begins to become two global economies. related, there is also this issue, right, that arises even for, even though the Indian current, at least diplomatic and geopolitical situation of India is quite secure at the moment, but how this will evolve, we do not know, and then one has to therefore speculate as to what are the worst case scenarios and so forth. So also in this happened that Russia's assets were frozen by the United States, Western countries at large, access of the central bank being denied and so forth. So these are the possibilities that have now become. And one does see a bit of tendency in the United States, suddenly kind of in the last, I think starting with Trump administration more so, but continued, this tendency to use the sanctions more widely. We saw that actually even before Trump, or maybe it was during Trump, the CATSA sanctions, which, and this really then targets the third countries. That if you transact with a country that I don't like, then I'm going to hit you with sanctions also. So these issues that are now kind of beginning to arise. In the longer run, do you see, does India need to begin thinking strategically somehow, what kind of measures to at least begin thinking? I mean, as I said, right now, this is not a major issue for India. It has not been subject to any of the big sanctions, but it can happen.
Thank you, Arvind. Great questions. We're really at a kind of global fork in the road because, as you said, the weaponization of economic sanctions and the rules of the game that everybody agreed to for decades and decades, the fact that those have been weaponized, right? So it's trade, it's the payment system, it's now, the nuclear option, which is foreign exchange reserves, that's going to create a lot of disruption. So as you pointed out, there is a real possibility now that there is a fragmented structure, that you might have groups of countries coming together and saying, let's have our alternative payment system, which is outside the dollar system. Let's have our own invoicing patterns. Let's have our own capital flows. Let's have our own trading arrangements. And that leads to a lot of fragmentation. And that is the point I was making earlier, that in a way, all of this is accelerating and accentuating some of the deglobalization forces that were already set in motion after the US-China trade war started. But I think one also has to be realistic about what's possible, because I don't believe the hegemony of the US dollar is necessarily at immediate risk. And what do I mean by that? If you look at unit of account, medium of exchange, and FX reserves, the dollar still dominates. I mean, just look at trade invoicing patterns, for example. 75% of trade in Asia is invoiced in US dollars. 100% of trade in Latin America is invoiced in US dollars. You have outside of the US and EU, more than 50% of trade exports invoiced in US dollars. You look at dollar liabilities outside the US, at last count it was 17 trillion, which is twice more than everything else added up. Right? Lots of talk about the Chinese yuan, but as a share of global FX reserves, it's just 3%. So I think we have these two forces in play. One is the desire to fragment and evade the weaponization of payments, and capital flows and reserves. But the fact is, this is going to be just tinkering at the margins because the dollar hegemony, for a variety of reasons that require a separate panel discussion, still dominates. Now, the question is going to be for emerging markets like India, what value are these reserves? Russia gathered these for 15 years and found it didn't have much value. We have $700 billion and there are no answers, but what are the kinds of questions we should be asking ourselves? How do we diversify our reserves, right? But more importantly, if we are actually vulnerable to certain commodities, for example, oil, do you actually want to start thinking about the prospect of holding reserves in commodities and not in currencies, which then will be subject to sanction? Right? That's one kind of question. The other question is, how do we minimize the need to hold reserves if on a rainy day these won't be useful? Do we want to use macroprudential measures and essentially ensure that we don't have a lot of unhedged dollar debt in India and use prudential regulation to do that? So perhaps the need for holding fiat currency reserves is a little bit less. The third question is, how do we, the broader point of how do we increase our export share in a more globalized world? So I think the world as we know it is changing, but I still believe that even if we get this fragmented currency unions, it doesn't necessarily threaten the hegemony of the dollar. That's a far more secular decline that's going to take decades to go through. But emerging markets start to now thinking more creatively to say, assuming these worst case conditions, how do I create insurance mechanisms that will bypass it? And there are no easy and obvious answers.
Yeah, good. Actually, I like that what you say, and particularly the aspect that's going to be very gradual, because the fear I have really is that policymakers can overreact to this and forget the fact that there is tremendous gains to be had from staying open. You see, because this can really lead to this knee-jerk reaction that therefore we want to need to concentrate on our own markets, and therefore you go back to looking inward. And that is a big risk that this poses, which is actually that was my reason to pose the question to you in the first place.
I just take 30 seconds. The legitimacy of protectionism has increased ever since the US and China got in that war. But the case for unilateral trade liberalization, as you've written a dozen times over, is still very strong. So we shouldn't get seduced by these global tendencies. One very last point about this whole thing on the US dollar. Very interesting paper out by Barry Eichelgreen earlier last month, which shows even FX reserves, which have come down from 70% of US holdings to 60%, that hasn't gone to CNY. Most of those diversification has gone to the Canadian dollar, the Australian dollar, and other reserve currencies which offer higher risk-adjusted returns. So this notion that we're going off the dollar standard very quickly and the world is going to get overly a dangerous place is not consistent with the facts.
Okay, good, thank you. All right, Naushad, one other related question. Now Subbu has opened us into other issues. He spoke about privatization. I come to you, I think one untouched area so far in our conversation has been higher education. You write about this in your book, and of course, currently, we are still governed by the 1956 University Grants Commission Act, and whereas in other areas like medical education, we now have actually replaced the Indian Medical Council Act by a new one, which is more, which speaks to the current day needs. It seems to me that more needs to be done on higher education front as well. So, give your thoughts on higher education. What should India be doing?
So, I would sum it up actually in implement the new education policy really effectively. If we do that, it will take us very far along the path that we need to go. And there are a few elements to it. There's the whole thing about larger universities as opposed to individual professional colleges. Right direction of change. Setting up a national research foundation that would award grants, research grants on a peer-reviewed basis. Again, a sensible provision, something that can transform the wider research ecosystem and the education system itself. Having a loan guarantee program instead of being prescriptive in setting fees, again, a sensible move forward. These are all, I think, very right things to do, and we should see a timeline for when they will happen because it can be truly transformative. My one quibble with the new education policy for higher education is there's this phrase there where it says that it will rely on light but tight regulation. What that means, I have no idea. But I don't think one should rely on regulation at all to try to get quality into the system. Instead, I think what we should rely on is what the US system has, which is a combination of competition and autonomy. So you provide each institute with the freedom to do what they wish, to teach, to admit who they wish, to set the fees that they wish, to decide their own curriculum, to recruit who they wish, to expand numbers in particular fields as they wish. you free all institutes to do all of those things as part of autonomy, and then you let competition really sort the system out in terms of quality, because students will choose to go to the institutes that are good. And the role of the state in that then is to provide an assessment for it. Use the NAC, use the national accreditation body that we have created, use that to publish actual data, make it available to students and parents on how good the colleges are, and stop being so prescriptive on inputs. Stop saying you need so many acres of land and this and that. That's not what institutes are all about. They're about faculty and students, and just publish the results and then leave it to the market really to sort. So that's if you like, the set of recommendations that I think can take us very far forward. A last comment on higher education. The other piece, which is entirely within the policy framework and entirely within the control of the union government, is where R&D is done, where public R&D is done. Today, over half of national R&D is done in autonomous, independent government R&D laboratories. The great bulk of public R&D, as you know, throughout the world, with one or two exceptions, I think France is the one exception, is done actually in the higher education system. That's a big opportunity we have available to us. And what we've recommended from CI and what I've recommended in the book as well is that we should freeze the current allocation for public R&D to autonomous R&D labs at the current level in nominal terms, and then give the annual increase to the higher education sector on a peer-reviewed basis. If you do that, you will, at a stroke, in 1 year, double the total amount of research funding that's available to the higher education sector. And within 2-3 years, you'll start to transform the quality of the higher education system more broadly. It's actually an opportunity that's relatively easy for us to move on if we choose to.
Thank you. Now, there is a lot of conversation going on in the chat box. Most of these look to me like comments. There is one question on which I don't have any expertise, but I will read it out if anybody has any thoughts on it. So this regards agriculture. It says, what should be a policy change to bring Indian agriculture to modern era? Should an incentive be offered for formation of cooperatives of small farmers to increase land size and allow the government a better pathway to improve agricultural productivity? So anybody wants to take that? Good, Subbu.
Yeah, I think this is an area where reform was tried. And I think, the Farm Bill and the Essential Commodities Act, these are things that really need to, those are examples of excessive state intervention. And it is quite unfortunate the way the politicization happened, because the Farm Bill indeed was, for the benefit of small farmers, because the reality is that the large farmers actually have options to go and sell their produce wherever they want. And I think, we economists, we certainly recognize that if you actually have only one, entity to go and sell to, it is basically, it's a monopsony, and whoever has that power actually extracts the entire, surplus, and that is what the current situation is with the, with the mandis. For instance, reality, and I've actually gone and visited some of these, mandis, and I've seen that many times these small farmers actually come, load their trucks, which they actually, they get on hire. They don't own it either. They come and wait. The Haratia actually makes them wait till 3:30, knowing very well that this farmer has nobody else to go, and so the farmer has to do a distress sale. And I think we understand that if the farmer had the option, just the option, to be able to say, look, if you don't want to buy, I can go and sell it elsewhere, I think that is enough. We know from Nash bargaining that outside option increases the the surplus that they will get. Similarly, when it comes to the Essential Commodities Act, and we showed this as well, all storing is equated to hoarding. And as a result, none of the storage infrastructure has come up. And this again hurts the small farmer. Large farmers have the deep pockets to be able to store. So we have a big problem on some of these aspects. At the same time, also on the input and the output side. On the output side, the NFSA, I think the National Food Security Act that was enacted, I think did incredible amount of damage, and nothing has changed. Even the prices and the overall entitlements, as a percentage of population remain the same. So there's a huge amount of subsidies that is going in there. A lot of people who don't even deserve to get it, getting it still. And at the same time, I think on the input side, the minimum support prices, and I think a lot has been written on the inefficiencies they create. We've become a grain-centric economy with just rice and wheat being the two main crops, because the risk-adjusted payoff that a farmer gets, actually, because he faces no risk when he produces rice or wheat, because he knows he can go and actually sell it to the government any amount, and the government is willing to pick up any amount. So naturally the producer is focusing only on producing rice and wheat, which depletes water. Overall, if I summarize, I think there is just too much intervention in the agriculture sector. There needs to be a lot more in the interest of the small farmer. And I think hopefully some of the election results that have come now, especially in Western UP, should convince that this was indeed basically by a very small minority, who are certainly not representative of the interests of small farmers. This is, I think, in general, if there is one sector where the productivity has just been stagnant completely, it is agriculture. And this is really the first move has to be in reducing state intervention significantly on many dimensions, actually MSP, on the NFSA, and on the mandis, on removal of ECA as well. For instance, we showed, in the Essential Commodities Act, the number of, complaints that are filed, none of those actually lead to, to any action of people being arrested or any action, which basically seeks that the ECA has just become an opportunity for rent seeking by many people, and laws like that really need to go. Last point here, actually, a lot of these laws were enacted in the 1950s and 1960s, when the food economy that India faced was substantially different from what we face today. And I think the fact that we continue to actually hold on to those when the economy has changed dramatically, yet the state of the small farmer continues to be so poor, which is itself an endogenous outcome, I think suggests that the political economy needs to actually now push towards these reforms for reducing state intervention significantly in agriculture, something that I think hopefully will start happening at some point.
I really hope so on that one. Actually, you have laid down a number of things which need to be done, but that is somehow, the reform in agriculture has proved to be the hardest. And the recent episode of the reversal of the farm laws really somehow seems to me sets back. The problem there is one of political economy, because you got 45% of the votes sitting there. And anything that can be painted as being anti-farmer, and you don't need a large, even if the large majority of the farmers are not supportive of that, they are not the ones with the voice. So a small vocal minority of farmers can actually paint anything as anti-farmer, and that becomes very difficult for the government to actually resist. So the political economy, I've always felt.
Sorry, Arvind, just quickly, 30 seconds. I think you're absolutely right. But there is some very important signal in what has happened in Western UP. I think that's the point I would
I totally agree with you. And yet I tell you that, yet it is difficult. No, I mean, look, people have repeatedly said, even if you look at the votes, at the end of the day, the Prime Minister has returned twice and probably will come back in 2024 as well, precisely from what has happened in the elections in the 5 states just now. Yet it seems to me that when it comes to farmers, this is always a small minority can carry the day, which is what seems to have happened. Okay, I think we are wrapping up this session. So I'll just throw it open if anybody wants to make closing comments. Take a minute or two, and we can have the round and then conclude. So.
Arvind, I want to say two quick things.
Yeah.
One is just on the earlier point about weaponizing interdependence and so forth, just to add to that my sense, and maybe I'm wrong about this, I hope I am, is that the US now is in a kind of a position where it's seeing less of a value in the global public goods of the WTO and kind of international institutions and so forth. It's achieved its growth trajectories. They see, maybe it's easier for them to deal one-on-one, et cetera. So I think there's a bit of a risk there as well. And well prior to Ukraine and all the stuff, already the actions of the Trump administration in terms of, unilateral trade actions, which were, against the spirit of and the laws of the WTO even, were undertaken. And the Biden administration is in no great rush to reverse these things. So I kind of worry a little bit about U.S. kind of relinquishing this role in terms of the protector of kind of the rules-based international system, whether it's about trade or other things. And that's another kind of, trend to kind of keep in mind. Second, more lighthearted, I just quickly wanted to point out that there's several of your admirers in the chats who've all been campaigning for you to become the next finance minister. So I just thought I'd bring that to everybody's attention here as well.
All right. Anybody else?
Yeah. Maybe others. I could. Wait.
So let us have Sajid and Naushad, or Naushad and Sajid, and then come to Subbu. Subbu will be the last word.
I'll be very quick, just to say thank you, Arvind, and hope to see you in India, whether as finance minister or otherwise.
It's a better.
Arvind, I'll just take a minute just to say that I think we focused on many areas: trade, agriculture, privatization. I think one other area is just tax reform. And I think the imperative over the next 3-4 years, the imperative here is one where all of us agree that public investment will have to be a key driver of growth over the next 3 years. All of us agree that health and education spend will go up. And on the other hand, you've got to bring the consolidated fiscal deficit down by 3 or 4% of GDP. So if you've got 3 or 4% of GDP in extra expenditure and a 3 or 4% of GDP fiscal consolidation that's necessary, where are those resources going to come from? Tactically, in the near term, asset monetization and privatization will fill the hole. But in the medium term, we have to go back to first principles and broaden the tax base. This will be, more work on the GST, broadening the base, simplifying the system. I know important steps have been taken to improve its compliance and revenues have gone up, but I think the design will need to be revisited at some point. And also on tax reform, on direct tax reform, where we'll need a GST kind of reform where exemptions go away, rates come down, the base is broadened, because without that 4-5% of GDP in higher tax revenues, something will have to give, either the consolidation path or the need for much needed expenditures, both on health, education, and infrastructure.
That's a beautiful summary. Beautiful summary. Subbu, you have the last word.
Thanks a lot, Arvind. Actually, I want to, just leave this thought to the audience, primarily on, I think some of the narratives that one ends up reading, and those of participants, sitting possibly in or maybe in a New York Times or other outlets. From the other side, I actually want to mention that I think this perception, if there is, that the economics actually, in India under this government is maybe being managed actually in a certain way. I want to dispel that. I think if you look at, I'll just give a couple of examples. If we look at the overall response to the crisis, the last two crises, global financial crisis versus the COVID crisis. Look at the way the fiscal response actually, what happened after the global financial crisis. We had very high fiscal deficit, very high current account deficit, very high inflation as well, double-digit inflation touching 17-18%. And that is because of the focus on revenue expenditures and the kind of spending itself vis-a-vis now. Now, many times we end up actually giving only credit to, basically our category economists. But I think let me give credit where it is due. Economists can suggest things, but it is the political establishment that implements. And in this case, if you contrast the response to the global financial crisis versus the COVID crisis as an example, I think that is testimony to actually some progressive thoughts being actually being implemented, and overall, therefore, in the management of the economy. I will end with basically the optimistic response that this decade India will definitely have very good growth because we have a reformer in the current Prime Minister. I think his reformist zeal is second to none.
I shall echo that, and I think by 2030, India will be the third largest economy in the world, second largest in Asia, and the decades that follow will be India's decade. So with that, we shall bring this to a close. Thank you all who have been with us for the last 3 days. I started, Praveen had once suggested that we should do it even if it's virtually. And so it's really, you can all thank to Praveen, because without his suggestion and encouragement, I really was very shaky, because I was afraid that we'll not have much demand for the conference. So I'm glad Praveen prevailed, and so you can all thank him. Thanks all. We'll bring this to a close.
Thank you, everyone.
Thank you very much.
Thanks, Arvind.
Thank you.
Bye.
Bye-bye.
Nice to see you.
Bye.
The recording has stopped.